La, 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 la. Yeah. Sorry, guys. Yes. Yeah, hello all, welcome back to BCCA. This is CMA final SCM and DM war room session. Okay. Yes. See guys, in this particular session, yeah, hello all, welcome back to BCCA. This is CMA final SCM and DM. Yes, in this particular session, so I will be taking from 3 o'clock to 4 o'clock. I will discuss SCM MCQs, sir. So from 3 o'clock to 4 o'clock, I will discuss SCM MCQs. Later, so after 4 o'clock, we shall discuss, okay, so SCM chapters, concepts and some problems, sir. Problems. So here I won't solve all the problems. Okay, I will pick some problems, conceptual, one problem for each chapter. Okay, except marginal costing and standard costing in SCM. Okay, so I will explain. I will give the explanation regarding key points or key adjustments in some conceptual problems, sir. Then after 6:30, so after the discussion, we will take some half an hour break. After 6:30 onwards, again we will be taking so DM MCQs for 1 hour. Then later from 7:30 onwards, I will be discussing DM chapters. Okay, so here I will try to cover MCQs first of all, and then here I will cover some problematic Super 50 questions, some of the Super 50 questions, regarding this question number 3, question number 4, question number 6, question number 7, question number 8, sir. Regarding these questions, I will be discussing some problems. See, so without wasting any time, we shall start the SCM and DM bullet MCQs, sir. Okay, see guys, first of all, for first 1 hour, I will be discussing SCM MCQs. Then we will discuss some most important problems, conceptual problems in SCM. Then, so after some half an hour break, again, so I will discuss DM MCQs. Later, I will discuss DM related chapters, most important problems. Okay, so that is our plan. I will be staying here live, so till 12 o'clock this night. Okay, so if you are having any doubts, you can ask me. So I will be available to solve your doubts, sir. Okay, so now see chapter number 1. So first of all, I want to give some brief about this MCQs pattern, sir. See, generally, out of 15 MCQs, in previous attempts, 9 MCQs are being asked from SCM and around 6 MCQs are being asked from DM part, sir. But surprisingly, in previous attempt, that means in December 24 attempt, they have asked only 7 MCQs from SCM part and so nearly 8 MCQs from DM part, sir. DM part. Okay, so whatever it is, in previous December 24 attempt, so the pattern is like this, sir. From chapter number 1 and 2 MCQ, sir. Chapter number 1 MCQ, 2 1 MCQ. Okay, so easiest MCQs. And so from decision making techniques, chapter number 3 2 MCQs. One question definitely will be from marginal costing. Another question that may be from transfer pricing, target costing, relevant costing. Okay, so from chapter number 4, again, 2 MCQs will be there in the question paper. And from chapter number 5, standard costing, one question will be there, sir. So coming to DM part, okay, so 2 MCQs, direct 2 theoretical MCQs from tools for data analysis. And from 2 MCQs from network analysis, 1 MCQs from simulation, learning curve, maxima, minima, business forecasting, sir. Okay, so this pattern may change, but see, the most easiest MCQs directly we can write are chapter number 1 and 2 theoretical MCQs, sir. 2 MCQs and chapter number 15 2 MCQs. 4 easy theoretical MCQs. Okay, so which are being asked from study material source or MCQ booklet only. Okay, so nearly some around 25 to 30 MCQs are there, sir. If you read those MCQs, definitely 4 MCQs will be asked. So direct 8 marks. Okay, and so then we can discuss network analysis, sir. This is most easiest chapter from which 2 MCQs are being asked. Okay, so here also some 15 MCQs will be there. Definitely 2 MCQs can be asked. So till now, so chapter number 1 to 15, 4 MCQs plus network analysis, 6 MCQs, sir. 6 MCQs. For remaining MCQs, 2 MCQs will be from decision making techniques, 2 MCQs will be from chapter number 4. Okay, 10 MCQs. Remaining 5 will be asked from standard costing and 4 MCQs from DM part, sir. Okay. So first of all, I will start with the SCM part, the 2 with chapter number 1, sir. See, in chapter number 1, so first question, read this question, sir. Which of the following important, which of the following are important pillars of strategic cost management? Strategic cost management determines the company's comparative position. Okay, the pillars of standard costing, the pillars of strategic cost management, which gives the comparative position of the industry. Company's comparative position, nothing but a position analysis, strategic positioning analysis. Okay, dash is defined as the real and permanent reduction. Real and permanent reduction. Cost reduction is a real and permanent reduction. Cost control is temporary. Okay. So coming to third one, which one of the following is not a primary activity of value chain? Okay. So inbound logistics, primary activity, operations, outbound logistics, services are primary activities. So infrastructure is secondary activity, sir. Okay, answer is D. Which of the following is not secondary activity? Procurement, human resource, technological development, all these are secondary activities. Service is primary activity, sir. This is the answer C. Okay, now activities required to design, develop, produce, market, distribute, service a product are known as value chain activities, sir. Value chain activities. So next one, which one of the following is not term normally used in value analysis? Use value, esteem value, cost value will be used in value analysis, sir. Along with this, exchange value will also be there. Exchange value, these four terms will be used in value analysis, but resale value will not be used in value analysis, sir. See, seventh question, the company has forecast sales and cost of goods sold for the coming year 25 lakhs. 25 lakhs and 18 lakhs respectively, sir. So given cost of goods sold is 18 lakhs. Okay, inventory turnover has been taken as 9 times per year. Okay, inventory turnover. So inventory turns, that is equal to cost of goods sold divided by average inventory, sir. Okay. See, in case inventory turnover increases to 12 times, short-term interest rate on working capital is 10%. What will be the saving in cost? See, first of all, you have to find out the average inventory, sir. Okay, so that we can calculate the what will be the saving in working capital. Okay, so on that interest part on working capital saved will be the cost saving, right? So that's why first of all we need to calculate average inventory. Average inventory that is equal to, so cost of goods sold divided by inventory turns. Here we have two inventory turns, 9 and 12. When inventory turns are 9, cost of goods sold 18 lakh divided by 9, that means 2 lakh. When inventory turns become 12, so then 18 by 12, so 1.5 lakhs. That means if inventory turns increase from 9 to 12, so average cost will be reduced from 2 lakh to 1.5 lakh. So 50,000 is inventory savings. On the 50,000, so working capital savings, 10% is the interest saving. So that means 5,000 is cost savings, sir. Next one, there are three core areas to be considered while developing supply chain strategy. People, process, systems are three core areas which to be considered in supply chain strategy, sir. Okay, which of the following is not true for red ocean strategy? Okay, red ocean strategy and blue ocean strategies, two strategies are there, sir. Red ocean strategy says like okay, so compete in the existing market. Blue ocean strategy is like says like go into the new market, explore the new markets. Okay, see, red ocean strategy not true for red ocean strategy. So beat the competition, red ocean strategy, this is correct. Exploiting existing demand also correct for red ocean strategy. Make the value cost trade-off is also true for red ocean strategy. Break value cost trade-off is not true for red ocean strategy, sir. Next one, for blue ocean strategy, make the competition irrelevant. Blue ocean strategy says like so enter into the new markets, compete in the new markets. Then so that strategy says like so that makes the competition irrelevant. Okay, that's it. Next one, so chapter number 2. See, chapter number 2, sir. TQM stands for total quality management. 4 P's of total quality management are people, process, problem, preparation. Price stands for problem identification, ranking, analysis, innovation, solution, evaluation. Price stands for problem identification, ranking, analysis, innovation, solution, and evaluation. 6 Sigma. So this 14th question, 6 Sigma is about quality systems. DMA IC, DMA DV methodology is associated with. In 6 Sigma, we'll be having two methodologies, DMA IC, DMA DV. DMA IC is for existing product, DMA DV is for new product. So 6 Sigma methodology. Pareto analysis recognizes 80-20 rule, sir. So which of the following is not quality parameter for service organization? Service organization quality parameters are consistency in giving services, friendliness while providing services, promptness while providing services, but durability with so which talks about the product, durability which talks about the product, not for services. Okay, warranty period return. See here, this is a cost of quality question, sir. From here we have so nearly some 8 or 9 questions are there with respect to the cost of quality. So in cost of quality, 4 types of costs are there, sir. Okay, prevention cost, appraisal cost, internal failure cost, actional failure cost. So the cost incurred for producing good quality of products is called prevention cost. So prevention cost means you have to prevent defective goods from occurring. Appraisal cost, after production we have to check that produced goods are good quality goods. Okay, if any, so in that appraisal cost, in inspection, if you found out any goods are okay defective, means then we will incur internal failure cost. Okay, once the goods reach to the hands of customer, if customer find out the defects in goods, finished goods or products, then that will be external failure cost, sir. So warranty period return. Warranty period return. So warranties, when we will incur warranty cost, sir, that means when customer receive the goods and he found out the defects in the goods, then only we will incur warranty cost, external failure cost. Cost of revoke. So cost of revoke means in internal inspection, if you found out any goods are defective, then you will incur internal failure cost. Okay, so cost incurred to ensure failures do not happen. So prevention, we are trying to prevent here. So downtime due to defect. So already defect identified, and due to that defect downtime was there, sir. So just for revoking something like that, so downtime is there, means that goes to, that falls under internal failure cost, sir. Which of the following cost of quality is incurred in the process of uncovering defects? Uncovering defects means we have to check, inspect produced goods. So that is appraisal cost. Which of the following quality costs are incurred when inferior products delivered to customer? Inferior defective goods are delivered to the customer, then so if customer finds the goods are defective, means then we will incur external failure cost. Liability claims, again external failure cost. Depreciation of product testing equipment. Okay, so we use testing equipment for inspection of work in progress and finished goods. So for that inspection, okay, so that inspection cost falls under appraisal cost. The testing equipment depreciation also falls under appraisal cost. See, next question, sir. Question number 24. A factory is setting up a special inspection at supply point of raw materials. Inspection was there, sir. Okay, so cost of inspection is 80,000, sir. Consequent to this, there is a lesser number of returns from the customers. These goods used to be sold for 1 lakh. Variable cost 80,000. So the change in quality cost are okay. So for inspection, we are incurring how much cost, sir? Cost 80,000 rupees. Okay, so previously those goods were being returned by the customers. That means we were incurring a loss of variable cost only, our loss, sir. Previously, what is saved? Okay, so by introducing inspection system, what we are going to save, sir? That loss variable cost on defective items. Customer returns will be there. No, that variable cost only we are saving. So that's why. So just because of introducing inspection, cost is 80,000, savings is 80,000. So net effect is no change, sir. So now coming to marginal costing. So marginal costing, break-even point of manufacturing company is 1,60,000, break-even point. So fixed cost is 48,000, variable cost is 12 rupees per unit. PV ratio PV ratio is, how to calculate PV ratio when there is break-even point? So break-even point is equal to fixed cost divided by PV ratio. Then PV ratio is equal to fixed cost divided by break-even point. What is the fixed cost given in the question? 48,000. Okay. 48,000 fixed cost. What is the break-even point? 1,60,000. How much percentage? 30%. That is PV ratio. Now, question number 26, sir. Saint Limited determines its selling price by marking up variable cost 50%. 50%. In addition to the company uses frequent selling price markdown to simulate the sales. If markdown coverage is 20%, what is the company's contribution margin ratio? See, so they use to fix the selling price by variable cost plus 50%. Selling price is equal to variable cost plus 50%, sir. Let us assume variable cost is 100. Selling price is equal to 100 plus 50%. 150 is the selling price, sir. Now the markdown, selling price markdown is 20%. That means 150 minus 20% is 120. So selling price is marked down from 150 to 120. Okay. So now contribution. How much is the contribution, sir? Contribution is equal to selling price minus variable cost. Selling price is 120 minus variable cost is 100. So contribution will be, new contribution will be 20 rupees. Okay. So contribution margin ratio, contribution divided by selling price, 20 divided by 120, 16.67%. Next one. See which of the following is true about theory of constraint. Okay, theory of constraint recognizes that lowering the inventory decreases carrying cost. If you decrease the inventory, if you reduce the inventory means carrying cost will be reduced, no? If carrying costs are reduced means overall cost will be reduced. Overall cost is getting reduced means okay, sales minus cost reduced, sales constant. So then, so profit will be increased. So this is what being said by the theory of constraint, sir. Next one, higher the actual hours worked. So see here, in this question they are referring about the capacity usage ratio. So capacity utilization ratio, sir. Capacity utilization ratio is equal to actual hours, standard hours, budgeted hours. Standard hours divided by actual hours is efficiency ratio. Standard divided by budget, activity ratio. Actual hours divided by budgeted hours, nothing but capacity utilization ratio. Okay, so capacity utilization ratio is equal to actual hours divided by budgeted hours. If actual hours are getting increased means capacity utilization will also, what will happen to the capacity utilization ratio, sir? If numerator is capacity utilization is equal to actual hours divided by budgeted hours. If numerator getting increased means capacity utilization will also increase. Now coming to 29th question, sir. Excel Products Limited manufactures 4 products. Example, product E, product F, product G, product H with same raw materials. The input requirement for product E, F, G, H are 1 kg, 2 kg, 5 kg, 7 kg respectively. Product wise selling price and variable cost data given under. Selling price for E, F, G, H are 100, 150, 200, 300 respectively. Variable cost also given, sir. See in this question what they are giving, sir. So 4 products are being produced by the company, and for each product they are giving selling prices as well as variable cost. Now what they are asking, sir? Assuming raw material availability is the limiting factor, the correct ranking of the product would be. So they are asking so preference ranking for the products. They are asking preference ranking for the products by using a limiting factor. So whenever there is a limiting factor, we have to give the ranking to the product based on contribution per limiting factor, sir. So here to calculate contribution, they have given selling price minus variable cost. See, 4 products are there, E, F, G, H. Okay. To calculate preference ranking, we need to take what, sir? Selling prices minus variable cost. Selling price minus variable cost, contribution. Contribution per unit of raw material. Raw material usage 1, 2, 5, 8, 50 by 1. Contribution for limiting factor 50 for product E, 40 for product F, for G 100 by 5, 20. For H, 170 by 7, 23 point something. So what would be the preference ranking, sir? Highest contribution per limiting factor should be given first rank, 50. So 40. So 23 point something, 20. So that means E, F, H, G, sir. Option B, E, F, H, G. This is the correct answer. Now, coming to the tech company has fixed the tech, tech company has fixed cost of 4 lakh and variable cost of 75% of the selling price. Fixed cost is given, variable cost 75% of the selling price. To realize the profit 1 lakh from sales of 5 lakh units, the selling price per unit. Okay, see what they have given in the question, sir. So profits are given, sir. Let's say profit 1 lakh. Our target is to earn profit 1 lakh rupees. So what is the fixed cost? 4 lakh. So that means to earn a profit 1 lakh with fixed cost 4 lakh, we need to earn contribution of 5 lakh, sir. Okay. So now in the question they have given 75% of variable cost. So that means this contribution is equal to 25%. Okay. Variable cost percentage plus contribution percentage is equal to 100%. No. If variable cost percentage is 75, contribution percentage is 25%. Okay, here now if this 5 lakhs is equal to 25%, how much would be for 100%? The sales would be 5 lakh divided by 25%, that is 20 lakhs, sir. Okay, here in the question they are not asking sales, selling price per unit. Sales divided by number of units, 5 lakh units, 20 lakhs divided by 5 lakhs, that is 20 by 5 rupees, 4 rupees selling price, sir. Okay. Robinson Limited, a manufacturing company, has break-even point when sales are 10 lakhs. When sales are 10 lakhs, break-even point is was there, sir? Fixed cost 4 lakh. To realize the profits 2 lakh from sales of 3 lakh units, selling price per unit should be. Okay. Again, same model, same question, sir. Say this we shall try to calculate by using different method. Same like previous question only. Okay. So PV ratio, fixed cost divided by break even point, 4 lakh divided by 10 lakh, 40%. Okay. So PV ratio is 40%, sir. So desired profit, sales at desired profit, that is equal to fixed cost plus profit divided by PV ratio. What is the fixed cost, sir? 4 lakhs. What is the desired profit? 2 lakhs. 4 lakhs plus 2 lakhs, 6 lakh divided by PV ratio 40%. That means how much, sir? 15 lakhs is so sales at desired profit. Okay. So sales per unit, number of units, selling price per unit is equal to, so sales required sales for desired profit 15 lakhs divided by 3 lakh units, sir. 3 lakh units. 15 divided by 3, 5. So 5 is the selling price per unit. Okay. Next one. A company can make 100 units of necessary component part with the following cost. Direct material 60,000, direct labor 10,000, variable cost 30,000, fixed overhead 20,000. Company can purchase the component externally for, so 1,10,000. Only 5,000 of fixed cost can be avoided. So this is nothing but make or buy situation, sir. Okay. So if we make the 100 units of product, what would be the cost, sir? So if you make the product, the cost would be direct material 60,000, direct labor 10,000, overhead, sir, 30,000. Okay. And also variable overhead 30,000, fixed overhead 20,000, sir. So total cost of manufacturing is 1,20,000. For manufacturing 100 units, the total cost would be 1,20,000, sir. Sir, first of all, I will be discussing 1 hour SCM MCQs. After that, so by 4 o'clock, I will complete SCM MCQs, sir. Later, I will discuss SCM chapters. Okay. So after half an hour break from 6:30 onwards, for 1 hour, I will discuss DM MCQs. Later, I will discuss some DM chapters. I will be available for, I will be in live till 12 o'clock this night. Okay. If you are having any doubts, okay, so you So preparing, you start preparing, sir. So just watch the MCQs, then I will be telling some questions. You try to solve those questions. If you are getting any doubts, means please then you can let me know. I will be available here to solve your doubts. That's it. Okay. Hi Shantosh Kamle. Hi Jagadish Jami. Namrata Mukherjee. Hi Srinivasan. Hi. Okay. So hello all. So those who are watching this video, please comment from where you are watching this video. Okay. Okay. Hi guys. Please comment from where are you watching this video. Okay. See, next one. See guys, in this particular question, we have to make what, sir? Make or buy decision, sir. To produce 100 units, the cost would be 1,20,000. Okay, if you purchase, what is the cost, sir? 1,10,000. But okay, so even though if you purchase, you will incur fixed cost. How much, sir? Okay, only fixed cost is 20,000. Out of 20,000, only 5,000 can be saved. That means anyway you will be, even if you purchase from external market, anyway you will be incurring 15,000 cost. That means total cost of buying is 15,000 plus 1,10,000, 1,25,000. So that means making cost is 1,20,000. So buying cost is 1,25,000. Which option is the better one, sir? The option which is having least cost is the best option. No. So that's why. So making cost 1,20,000, best option. Save. So make in-house and save 5,000 rupees, sir. So next question number 33. AP Products sells product A at selling price of 40 rupees per unit. AP cost per unit based on full capacity is 5 lakh units. Full capacity cost per unit based on full capacity 5 lakh units is as follows. Direct material 6 rupees, direct labor 3 rupees, indirect manufacturing expenditure 60% of which are fixed, 10%. One time only special order to buy 50,000 units was received from an overseas distributor. The only other cost that would be incurred on this order would be 4 rupees per unit for shipping. Okay. AP has sufficient existing capacity to manufacture additional units. In negotiation price special order, AP should consider minimum selling price. Okay, so minimum selling price we have to calculate, sir. Yeah, hi Geeta Gopi, hi Preeti, hi Geeta Gopi, hi Mridula, hi Muhammad Rafi, Peach, hi Peach, Arjun Kumar, hi. See, next question, sir. See, in this question, what they are saying, sir? A special order came for 50,000 units. We have to find out the minimum selling price. Okay, how to calculate that minimum selling price? Minimum selling price, as they are having additional capacity, the minimum selling price would be variable cost only. Okay, so this point was there in transfer pricing also. The minimum transfer price, if they are having additional capacity, is variable cost only. Now, here we shall try to calculate the variable cost, sir. What is the variable cost? Direct material 6 rupees. Okay, direct labor 3 rupees. Out of 10 rupees, 60% is fixed. That means 40% is variable. That means 4 rupees. 6 plus 3 plus 4, 13. And shipping cost for this special order, shipping cost 4 rupees per unit is there, sir. Okay, that means 13 plus 4, 17 rupees. Okay, so 17 rupees is the total variable cost. This will be the minimum selling price, sir. The break-even sales of GXT Limited manufacturing company is break-even sales 3,75,000, while fixed cost is 1,12,500. If margin of safety is 40%, what will be its profit, sir? See, first of all, see, if margin of safety is 40%, break-even point will be how much, sir? 3 lakh, so 60%. Okay, for 60%, how much sales, sir? 3,75,000. Okay, so if this 3,75,000 is for 60 percentage. How much would be for 40 percentage? That is 3,75,000 divided by 60 into 40, 2,50,000, sir. Okay, that means margin of safety sales is 2,50,000. Okay. Now let's calculate PV ratio, fixed cost divided by break even point. So what is the fixed cost? 1,12,500, break even point 3,75,000, 30 percentage. Okay, so now profit is equal to margin of safety into PV ratio. Okay, as they have given margin of safety based profit calculation, profit is equal to margin of safety into PV ratio. Margin of safety 2,50,000 into 30 percentage, 75,000. Okay, so next one. A company produces a product which is sold at a price of 80 rupees. A product is being sold at 80 rupees. Its variable cost is 32 rupees. Company's fixed cost is 11,52,000 per annum. Company operates at margin of safety of 40%. The total sales of the company. Okay, see, they're asking us to calculate total sales of the company, sir. See, what is the contribution? Selling price is 80, variable cost is 32, sir. Contribution is 48. Fixed cost is 11,52,000. Okay, by using this we can calculate what's our break even point. Break even point is equal to fixed cost 11,52,000 divided by 48. So break even point in units will be 24,000 units, sir. Okay, so margin of safety is 40 percentage, means break even point is 60 percentage. Then total sales. Okay, if for break even point 24,000 units is for how much percentage, sir? 60 percentage. Are you getting this point, sir? In this question they are asking us to calculate total sales. To calculate total sales they have given margin of safety, break even point, and so information with related to okay, PV ratio also, okay, contribution also given, sir. That means we can calculate break even point. First of all, with the given information 80 minus 32, 48 rupees is what's our contribution. Okay, so fixed cost divided by contribution, you will get a break even point 24,000 in units. This 24,000 is for 60 percentage. Then how much will be for 100 percentage? 24,000 divided by 60 into 100, 40,000 is 40,000 is sales, sir. Total sales, sir. June 2019, June 23, June 25 attempt MCQ, sir. See, XYZ Limited is the following alternative. Hi Anjali Krishna, CM Intermediate Sandeep. Hi Anjan Kumar. Hi Muthuraman. Hi. XYZ Limited has the following alternative planned activity level, sir. Okay, level E, level F, level G. 3 levels are there. So cost at this level 1 lakh, 1,50,000, 2 lakh. Number of units produced 5,000, 10,000, 15,000, sir. Now what they are asking in the question? If fixed overheads are remain constant, then fixed overhead cost per unit at level E is. Okay, they are asking us to calculate fixed overhead, not just fixed overhead cost, sir. Fixed overhead cost per unit. Okay, see, first of all, with the available information we can calculate what, sir? With the available information we can calculate variable cost. How to calculate variable cost? Change in cost divided by change in units. Change in cost. So just by increasing production from 5,000 to 10,000, by increasing in 5,000 units, cost increases by 50,000. 50,000 divided by 5,000, 10 rupees is variable cost. Okay, so at level of E, what is the total cost, sir? 1 lakh. Okay, so out of this 1 lakh, this is a fixed cost as well as variable cost. What would be the variable cost, sir? Units, 5,000 units into 10 rupees variable cost, total 50,000. Out of 1 lakh, if 50,000 is the variable cost, then remaining 50,000 is the fixed cost, sir. Okay, so total fixed cost is 50,000. Now we have to calculate what's our fixed cost per unit. How many units at level E? So 50,000 divided by 5,000 units, that's it. We will get 10 rupees per unit as fixed cost per unit, sir. Next. So this question, many students are asking this doubt in Telegram channel, sir. A company has break even point when sales are 3,20,000 and variable cost at level of sales are 2 lakh. how much would be the contribution margin? Increases or decreases if variable expenditure dropped by 30,000. Okay. See, break even point sales when 3,20,000. Company has break even point when sales are 3,20,000. Nothing but break even point is 3,20,000. Variable cost at that level is 2 lakh. That means what is the contribution, sir? 1,20,000 is the contribution. How much contribution margin increase or decrease if variable expenditure dropped by 20,000? See, first of all, initially sales is 3,20,000, variable cost is 2 lakh, so contribution is 1,20,000, sir. Okay, that means PV ratio is equal to 120 divided by 320, 37.5. Now, what are they asking, sir? If variable expenditure dropped by 30,000, contribution margin. Okay, so if 3,20,000 sales, okay, variable cost dropped by 30,000 means from 2 lakh minus 30,000, 1,70,000. From 2 lakh to 1,70,000 variable cost reduced means, okay, so then contribution would be 1,50,000. What is the PV ratio? 1,50,000 divided by 3,20,000, 46.875. What is the increase in PV ratio? Previously it is PV ratio is 37.5, but now what is the PV ratio, sir? 46.87. What is the difference? 9.375. Okay, so PV ratio will be increases by 9.375. Okay, so a company has the capacity of producing 80,000 units. Previously it sells 20,000 units at 100 rupees each. The demand is sensitive to selling price. It has been observed that every reduction in 10 rupees in selling price, demand is doubled. What is the point they are saying, sir? Okay, so if you fix your selling price at 100 rupees, you can sell 20,000 units. If you reduce the selling price by 10 rupees, for each reduction in 10 rupees, okay, sales will be doubled. Okay, if I reduce the selling price from, so at 100 rupees, 20,000 is the demand, sir. If I reduce the selling price by 10 rupees, 90, doubled. Okay, so one more 10 rupee reduced, 80 rupees, doubled. So demand would be doubled. So that means, what are the points they are saying, sir? Company has the maximum capacity 80,000 only. Okay, even if you reduce selling price by 10 rupee, okay, demand would be doubled, but we are not having that capacity to produce 1,60,000 units. Okay, so at selling price 80 rupees, what would be the demand, sir? 80,000 units. Okay, now what should be the target cost in selling price? This is target costing question, sir. Okay, so this is repeated, so which will also be there in target costing. What would be the target cost in selling price if demand is doubled at full capacity? Profit margin sale is taken at so 25% profit on sales, 25%. Now see, at full capacity our selling price is 80, sir. 80 minus profit margin 25%. How much, sir? That is equal to 60 rupees. 60 rupees what, sir? Target cost. Okay, so a factory can make only one of the three products X, Y, Z. Three products are there, sir. X, Y, Z. In the given production period, the following information is given: X, Y, Z, three products, selling price, variable costs are given, sir. Assume that there is no constraint on the resource utilization or demand, and similar resources are consumed by X, Y, Z. The opportunity cost of making 1 unit of Z. See, first of all, let us calculate contribution, sir. Okay, so for X, 1,500 minus 700, how much? 800 is the contribution. For Y, for 1 unit, 1,800 minus 950, 850 is the contribution. For Z, 2,000 minus 1,000, how much contribution? 1,000. Okay, generally what we do, sir? Resource consumption is similar. We are not having any constraint on the resources, then we shall try to produce the product which gives the highest contribution per unit. As Z is giving highest contribution per unit, we will produce Z. But what is the opportunity cost? Okay, opportunity cost means next best alternative available. What is the opportunity cost, sir? Next best alternative available. Okay, see, 1,000. So if I produce as 1,000 is the per unit contribution of Z. If I produce Z means what would be the opportunity cost? Next best alternative. Here we have X and Y. So X is 800 contribution, Y is 850 contribution. Which is the best, sir? 850. So that means opportunity cost of producing Z is 850. Next best alternative. Okay, see, next one. 40th question. A manufacturing company has break-even point. Break-even point when sales are. So when sales are 12 lakhs, fixed cost at this level are 4 lakh 80,000. If margin of safety 40 percentage, 5,000 units respectively, what will be the selling price per unit? A repeated question. Previously also we have done, sir. Okay, uh, so DSN Limited operates throughput accounting. The details of MB per unit is as under: selling price 50, material cost 20, conversion cost 15. If time on bottleneck resources is 10 minutes, what will be the return? Return means throughput contribution per unit. Here, return means throughput contribution, sir. How to calculate that throughput contribution? Okay, so if you observe, in the question they are asking return per hour, not per minute, sir. But okay, resource, sir, bottleneck time is given in minutes, sir. So first of all, let us calculate throughput contribution. How to calculate throughput contribution, sir? Selling price minus material cost, that is throughput contribution. Okay, selling price 50 minus material cost. Selling price 50 minus material cost 20, 50 minus 20, 30 is the throughput contribution. Okay, so bottleneck time per unit is 10 minutes. That means what is the bottleneck throughput contribution per minute? 30 divided by 10. That means 3 minutes, 3 rupees per minute. 3 rupee per minute is the throughput contribution, sir. 3 rupee per minute is the throughput contribution. Then see, throughput contribution per minute is 3, means throughput contribution per hour, as they are asking for hour contribution. 1 hour means 60 minutes, 60 minutes into 3, 180. Okay, now coming to the transfer pricing, sir. Coming to transfer pricing, sir. Read this question once. Please read this question. See, see, question number 3, December 2019 question, sir. Max Limited fixes their interdivisional transfer prices for its product on the basis of. See, guys, first of all, these MCQs I have compiled from past suggested answers. Okay, so new syllabus and old syllabus suggested answers, and so new syllabus NQPs. Okay, so ICMA has released one MCQ booklet, sir. Those questions are covered. Okay, so and some of the study material questions are also covered, sir. Okay, so as I'm discussing all these sources questions, means there are high chances that we will get MCQs from these sources only. Okay, just believe these questions, sir. See, fixed assets. So if you observe this question, so transfer prices are being fixed on cost plus return on investment basis, sir. Total cost plus return on investment. The budget for division X, fixed assets 5 lakh, current assets 3 lakh, debtors 2 lakh. Okay, annual fixed cost of the division. Okay, so what would be the investment, sir? Total assets 5 lakh plus 3 lakh plus 2 lakh, that is 10 lakh. 10 lakh is the investment, sir. Okay, so annual fixed cost 8 lakh, variable cost per unit 10 rupees, budgeted volume 4 lakh per unit, desired return on investment 28 percentage. Now, how to fix transfer price, sir? Transfer price is equal to total cost per unit, total cost per unit plus per unit return on investment. Okay, let's say, for example, see, what is the variable cost per unit? 10 rupees, sir. Fixed cost per unit 8 lakh divided by 4 lakh, that is 2. Okay, hi Usharani. We will discuss simulation after 6 o'clock. Thank you. See, so what is the investment, sir? What is the investment? See, variable cost plus fixed cost, 12 rupees. What is the return on investment per unit? Investment is 10 lakhs. On this 10 lakhs, 28% is return on investment. Okay, return on investment. Investment is 10 lakh, 28% is return on investment, 2 lakh 80,000 divided by, for how many units, sir? 4 lakh units. Per unit return on investment is 0.70. 12 plus 0.70. 12.70 is the transfer price, sir. Next one. A company makes components and sells internally to its subsidiaries and also to the external market. The external market price is 20 rupees per component, which gives the contribution 40% of sales. For external sales, variable cost includes 1.5 rupee per unit as a distribution cost. This is, however, not included in internal sales. There are no capacity constraint to maximize the company profit. The transfer price to the subsidiaries is the maximum transfer price. Sorry, minimum transfer price. What is to maximize the profit? See, so minimum transfer price is variable cost, sir. Variable cost to maximize the company's profit, not just divisional profit, sir. Okay, so from company's overall point of view, to maximize the profit, transfer price, minimum transfer price we should take, sir. That is nothing but variable cost. Okay, so external market selling price is 24, sir. Out of that, 40% is the variable cost. Then, contribution is 40%, sir. Selling price minus contribution 40%, variable cost 14.4. Okay, so from this 14.4, distribution cost is there, no? In the external market, we are incurring distribution cost. That cost we won't incur for transferring in to subsidiaries. Okay, so that distribution cost is 1.5 distribution cost, sir. Okay, variable cost 14.4. The cost we will incur in external sales. Okay, in case of internal sales, we won't incur distribution cost of 1.5. That means variable cost in case of internal sales are 12.90. 12.90. That is the minimum transfer price, sir. Okay, H group has two divisions, division P and division Q. Division P manufactures item that transfer to division Q. The item has no external market. Okay, so 6,000 units are produced and transferred internally each year. The cost of each division are as follows. Division P, division Q, sir, variable cost 100, 120, fixed cost 1,20,000, 90,000. Head office management decided that the transfer price should be set that provides a profit of 30,000 to division P. Division P. So transfer or division 30,000 profit should be there, sir. Then how much would be the transfer price? Transfer price is total cost, variable cost plus fixed cost plus profit, desired profit. What is the variable cost, sir? 100 rupees per unit. What is the fixed cost? Fixed cost 1,20,000. See, this 100 rupees variable cost plus 100 plus fixed cost 1,20,000. Okay, and also desired profit is 30,000, 1,60,000 divided by, so per unit we need to calculate now. Fixed cost per unit, desired profit per unit, 1,20,000 by 6,000, 30,000 by 6,000 in total. Okay, 100 plus this 25, we will get 125. That is transfer price, sir. Coming to relevant costing. Okay, particular job required 800 kgs of material. Okay, out of this 800 kgs, 500 kgs of particular item is currently in stock. Okay, so in case of raw material, what is the relevant cost? If that raw materials is not available in the stock, means we have to purchase from the external market. That purchase cost is relevant cost. If the raw materials are available in store, if you are not having any alternative use for those products, then we have to consider resale value as relevant cost, sir. Okay, so out of 800 kgs, see, out of 800 kgs, 500 in stock, 300 has to be purchased. Okay, for this 300, what would be the cost, sir? Cost of purchase is 0.80. Okay, 240. Okay, in that, so stock, so 500 unit stock, resale value is 200. So total value would be 440, sir. Total, total relevant cost. What is the opportunity cost of making a component part in the factory given no alternative use of the capacity? If the capacity is having no alternative means opportunity cost is nothing. We won't. So just because of producing something, we won't incur any opportunity cost, zero. If project has a net present value, see, are you getting this point, sir? Okay, so resources are not having any alternative use. Okay, so opportunity cost would be zero. See, next question. If a project A has NPV of 3 lakh rupees, project B has NPV of 5 lakh, opportunity cost of project B, project A, project B, NPV, okay, 30 lakhs, 50 lakhs, okay, definitely we go for higher NPV project, we select the project B. That means what is the opportunity cost? We are losing just because of selecting project B, we are losing 30 lakhs. The opportunity cost is next best alternative, that is 30 lakhs only. Okay, now coming to X Limited has an absolute item, okay, which are carried in the inventory at the original price of 50,000. If these items are revoked 20,000, they can sold for 36,000. Okay, so 1,000 items are there, sir. 1,000 items are there, sir. So original price is not relevant here. Okay, if you revoke, you will, so you can sell that product at 36,000, cost will be 20,000. Okay, net benefit on rework is 16,000. Okay, so if you don't do the rework, that could be sold for scrap value 6,000, sir. So what is the next best alternative means? Okay, if we do rework, our profit is 16,000. So if you don't do rework, your cash inflow would be 6,000. Okay, if you select, so definitely we go for rework. What would be the opportunity cost? So by selecting rework alternative, we are losing how much, sir? How much cash flow? Scrap 6,000 rupees. We are losing, sir. That is the next best alternative cost, opportunity cost, sir. Okay, read this question number 47. 1 minute, sir. 1 minute. Read this question number 47 and next question. See, in relevant costing, they're asking opportunity cost, sir. A production of John Limited has the capacity to produce either 4,000 units of A or 3,500 units of B, 5,000 units of C. The only product can be made in a particular period. The contributions per unit A, B, C are, okay, A can be produced 4,000 units into 10 rupees contribution, 40,000 total, sir. B can be produced 35,000 into 11, 38,500. So C can be produced 5,000 units into 8, 40,000. Okay. See, opportunity cost of A would be what, sir? If you select to produce product A, then what you are losing, sir? Next best alternative. We have alternative C 40,000, alternative B 38,500. So just because of having 40,000 contribution, if you select A, so what are the other alternatives, sir? B, C 38,500, 40,000, C alternative. Okay, if you lose, if you leave, so A means the next best alternative is C 40,000. The opportunity cost is 40,000, sir. 48th question. The shadow price of skilled labor. The shadow price of skilled labor is currently 10 rupees per hour. What does this mean? Okay, so shadow price of skilled labor means that means shadow price means okay, we have to assume like skilled labor is the limiting factor. If one more skilled labor is available, with that available skilled labor, if I produce the product, I will be getting 60 rupees, 10 rupees of contribution per skilled labor. Contribution will be increased by. So what does it mean? Means so contribution will be increased by 10 rupees per each hour, extra hour skilled labor can be obtained. Okay, so next, this one also repeated, sir, repeated question. Next one, this one also repeated, sir, same opportunity cost of revoke, no revoke. Okay, next one here, so opportunity cost of wheat, MN paid 5,30,000 for a machine used to powder the wheat. The machine can be sold for 1,30,000. The sale value of the wheat is 8 lakhs and its variable cost is 4 lakh. See, if you produce, how much contribution will be getting, sir? 8 lakh sale value minus 4 lakh variable cost. The contribution you are getting is 4 lakh. Okay, if you don't produce means you will sell the machine. In that case, you will be getting cash flow of 1 lakh 30,000. Okay, so opportunity cost of producing wheat. If I choose to produce the wheat means what is the opportunity cost? The next alternative I am having is not to produce. In that alternative, I will sell the machine. Okay, in that case, I will be getting 1,30,000. So opportunity cost is 1,30,000. Okay, next question. Repeated, sir. Saving cost. Oh, okay, so this was discussed in chapter number 2, inventory terms. Okay, so next question also repeated. So next question also repeated. So come to the page number 17, pricing decisions. Okay, cost plus pricing markup means desired return on investment. Okay, target costing. In target costing, this will be the answer to. So market driven prices. Okay. Buyer's market. So market driven prices means buyer's market. Okay, so 56th question. See this question, sir. T Limited produces and sells a product. The company expects the following revenues and costs in 2024. Revenues 400 sets sold at 600 rupees per product and 2,40,000. So that means the revenue is 2,40,000. Variable cost 1,60,000. Fixed cost are 50,000. What amount of sales must T Limited have to earn a target net income of 63,000 if they have tax rate of 30%, sir? Okay, so they're asking us what, sir? Target sales. We have to calculate target sales if our target profit is 63,000 after tax. Okay, net income after tax 63,000. Okay, what is the tax rate, sir? 30%. That means what is the tax? So income before tax, earnings before tax is 63,000 divided by after. So that means this 63,000 is equal to 70%. No, tax is 30%, right? 63,000 divided by 70% is 90,000, sir. Okay, so this is profit. To this profit, what is the fixed cost? 50,000. Then our target contribution is 1,40,000, sir. Okay, see now, what is the PV ratio, sir? Okay, so here with the basic information, see, original sales are 2,40,000, variable cost is 1,60,000, contribution is 80,000. Okay, so 80,000 divided by 2,40,000, 8 divided by 24, 1 divided by 3. So, sorry, 24 divided by 8 into 100. That means, sorry, 80 divided by 240. Okay, so 1 divided by 3 into 100, 3.33% is PV ratio, sir. Okay, now, so to calculate, so we got target contribution 1,40,000, no? See, first of all, with the given information, we have to calculate PV ratio, sir. PV ratio is 33.33%. To achieve this target net income of 63,000 after tax, before tax you need to earn 90,000. Before tax 90,000 means what is the target contribution? Add fixed cost, you will get target contribution. If our target contribution is 1,40,000, how much target sales? Okay, this 1,40,000 is for 33,033%. How much would be for 100%? That is sales. Contribution divided by PV ratio. You will get sales, sir. Okay. Amon Limited plans to introduce a new product, JOS, using target cost approach. The selling price of product is set at 120 for each unit. Hi Thor from Marvel. Yeah. Okay, just 15 minutes, sir. SCM MCQs will be completed. So this is also from target costing question, sir. So Amon plans to introduce a new plant using target costing approach. The selling price is 120 for each unit. Sales revenue for coming year is 9,60,000. Okay, so requires a return of 15% in the coming year. Investment is 20 lakhs, sir. What is the target cost, sir? Sales minus target profit. Nothing but to calculate target cost. Sales minus target profit. That is target cost, sir. What is the sales, sir? 9,60,000, sir. Okay, 9,60,000 is target sales. Okay, target profit is how much, sir? Investment 20 lakhs. Target profit is nothing but desired return on investment. 20 lakhs into 15%, 3 lakhs. Okay, 9,60,000 minus 3 lakh, 6,60,000. This is target cost, sir. Okay, so now target cost per unit. Okay, so 9,60,000 divided by selling price 120 means 8,000 units, sir. Okay, then target cost 6,60,000 divided by 8,000 units, 82.5 is the target cost per unit. 58th question. A Limited plans to introduce a new product issuing the target cost approach. A Limited plans to introduce a new product and issuing the target cost approach. So product sales revenue is 90 lakhs, sir. So 45 rupees per unit. That means how many units, sir? 90 lakhs divided by 45 rupees selling price, 2 lakh units, sir. What are they asking? Target and so target sales revenue 90 lakhs, target cost 64 lakhs. What is the desired profit per unit? Per unit they are asking, sir. 90 lakh target sales, 64 lakh target cost, difference 26 lakh is target profit per unit. Profit per unit is okay, number of units. How many units, sir? Sales divided by selling price per unit. Units, no. So divide this per unit profit, desired profit per unit 26 lakh. So 26 lakh divided by 2 lakh, 13 rupees per unit target profit. Okay, so 59th question, sir. The product of XYZ company is sold at a fixed price of 1,500 per unit. As per the company's estimate, 500 units of product are expected to be sold in the coming year. If the value of investment is 15 lakhs and its target return on investment is 15%, target cost would be selling price 1,500 minus for target cost, subtract target profit. What is the target profit, sir? 15 lakhs into 15%. 15 lakh into 15%. So per unit divide with the number of units 500. 450 is the target profit per unit, sir. Selling price minus target profit. Target cost 1050. Are you getting this point, sir? Here they have given X. So desired profit, that is investment, desired return on investment 15 lakhs into 15%. Per unit is divided with 500 units. 450 is the desired profit per unit. Sales 1,500. Desired cost 1050. Next one. So in this question, this is not 75,000, sir. 5,000 only. Some mistakes are there, sir. Some small clerical mistakes. See, Bent Limited, a manufacturer of components for VCD, has the capacity to produce 4 lakh units. The market demand is sensitive to the selling price. A company could sell 1 lakh units at a price of 5,000. So this is somewhat previous question only, sir. Previously we have done this kind of question. Okay, so what are they sales, sir? So if they fix the selling price 5,000, they could sell 1 lakh units. What is their capacity? 4 lakh. To sell 4 lakh units, whenever we reduce selling price by 500. Okay, so demand would be doubled. 5,000 minus 500, 4,500, 2 lakhs, sir. Okay, 4,000, if I fix the selling price 4,500, demand would be doubled, 2 lakh. Again, if I reduce by 500, if I reduce the selling price by 500, demand would be doubled. That means maximum capacity 4 lakh would be sold at a selling price 4,000. What is the target cost? To calculate target cost, so selling price minus profit per unit, so minus 25%. Target cost is 3,000, sir. So this is also same as above, repeated question. See this question, sir, semiconductors question. 120 units of semiconductors are required to sold to earn a profit of 1 lakh. 120 semiconductors are needed to earn a profit of 1 lakh. The fixed cost for the period is 80,000. Okay, the contribution of monopoly market as high as 3/4 of its variable cost. Okay, so if variable cost is 4, then contribution is 3, sir. Okay, determine the target selling price per unit. First of all, let's do the reverse calculation, sir. What is our target profit? 1 lakh. What is our fixed cost? 80,000. Target contribution is 1 lakh 80,000. 1 lakh plus 80,000. 1 lakh 80,000 is target contribution. Okay, now, so they have given some ratio, sir. Contribution is 3/4 of variable cost. If this contribution is 3, if this contribution is 3, what would be the variable cost? 4 would be the variable cost. For 4, how much, sir? If this 1 lakh 80,000 is 3, how much would be for 4 variable cost? So 1 lakh 80,000 divided by 3 into 4, 2 lakh 40,000. Okay, 3 lakh 40,000 is what, sir? Variable cost. Then sales would be 1 lakh 80,000 plus 2 lakh 40,000 to 4 lakh 20,000 is sales, sir. Selling price per unit, so number of units is 120 units. Then selling price would be 4 lakh 20,000 into 120. Selling price per unit 3,500, sir. This question repeated 63 question. Okay, now coming to activity based costing. Cost driver means who is lorry driver or truck driver, sir? Truck driver means the person who moves the truck forward direction, backward direction. That's it, right? Okay, now what is cost driver? Cost driver means the factor which increases the cost or else reduces the cost. Okay. Cost driver elements that cause the change in cost of activity. Activity based management accurately identify the sources of profit and loss, assigns the cost using measure of services consumed, recognize the causal relationship of cost drivers to activities, all these, sir. Now coming to 66th question, activity based costing. Under activity based costing, first of all we have to identify the activities, sir. Then so calculate the cost pools, that means cost of activities. Then identify the cost drivers. Then calculate the cost driver rate. Based on the cost driver rate, allocate the overheads to cost objects. That means option C, sir. Question number 67. P operates an activity based costing system to attribute its overhead cost to cost objects. Okay, now in its budget for year ending 31st March 2022, the company is expected to place total 28,095 purchase orders at a total cost of 1,10,010 rupees. Okay, purchase orders 2,895. Total ordering cost is 1,10,010 rupees. This activity and its related costs were budgeted to occur at a constant rate throughout the period. Okay, this is divided into 13 4-week periods. During the 4th week ended, 210 purchases were placed at a cost of 7,650 over recovery or under recovery. Okay, so first of all, what is the actual? So over recovery or under recovery overheads is nothing but absorbed overheads and actual overheads. So what is the actual overheads are given in the question? 7,650 is 7,650 is yes. The 7,650 is actual cost, sir. So what is the absorbed cost? Absorbed cost. We need to calculate cost driver rate. What is the cost driver rate? So what is the cost pool here? Ordering cost. What is the cost driver for ordering? Number of orders. Okay, 1,10,000. 1,10,000 10 rupees divided by, okay, number of orders 2,895. So cost driver rate is 38. In the particular period, how many orders were placed, sir? 210 purchase orders. 210 into 3, 38, 7,980. Okay, what is this is absorbed overhead. What is the actual overhead, sir? 7,650. What is the difference? Okay, so this 7,980 is absorbed overhead, sir. Under activity based costing system, actual overheads are 7,650. What is the difference? 330 is the over absorption. Actual overhead 7,650 only, but we have absorbed 7,980 over absorption. How much over absorption, sir? 330 is the over absorption. See, 330. Next one, 68, sir. At KLM company, the cost of personnel department has always been changed to charged to production department based upon the number of employees. Okay, cost of HR department is charged to production department based on number of employees, sir. Recently opinion gathered from the departmental manager indicate that number of new hires might be the better prediction of personnel cost. Okay, so departments are, so total personal department cost, HR department cost is 2 lakh rupees. That should be shared between ABC. In which ratio, sir? Now they are saying new recruit is the better prediction of overheads. Okay, better predictor of overheads. No? What is the number of new recruits? 8 to 12. Okay, new recruits are. See, how many new recruits are? New recruits are for division A 8, division B 12, division C 5, sir. Okay, now this 12 lakh should be divided between ABC in 8 is to 12 is to 5 ratio. Total 25. Okay, so if number of new hires considered to be cost driver, what amount should cost will be allocated to department A? 2 lakh into 8 by 25, 64,000. Okay, production overheads. So next question, sir. Production overheads for 50 units of product X are production overheads. So this is June 24 attempt question, sir. This is June 24 attempt question. Sir, 50 units of product X production overheads they are asking, sir. Machine oriented activity cost 1,35,400. Material ordering overheads 69,500. Okay. Now machine hours 1.5 hours per unit. Number of material orders are 6 per unit. Okay, what is the machine oriented cost? So highlight this point, sir. Cost per unit they are asking, not cost for cost driver. Cost per unit. Okay, so machine cost per unit. Okay, so what is the total machine oriented cost, sir? 1,35,400. How many units, sir? How many units, sir? 50 units. 1,35,400 divided by number of units. See, check this one once, sir. 1,35,400 divided by so this is not 50 units, sir. This is 500 units, I think. Then so the 1,35,400 divided by 50, that would be how much, sir? 270.80. Okay, so next one, 69,570 divided by 500, that is equal to 139.14. Okay, so this is 500 units, sir. Keep one point in the mind, sir. One point in mind, that is here they are asking cost per unit, not per cost driver, sir. So next one, which of the following not suitable for just-in-time production system? Batch production is not suitable for just-in-time production system, sir. Okay, so yeah, hi Ankita Prabhu. So can we watch this instead of Supertan? Okay, for MCQs, okay, you can watch this live session. Okay, so in this live session itself, I will be explaining some Super 50 questions even more quick and faster way. Okay, so if you want to discuss those questions to be discussed in detail way means okay, watch Sopartan. Otherwise, okay, so if you can understand, okay, if you want somewhat faster revision means watch this class. So I will be picking some questions for each chapter. So I will be with you in your preparation. Okay, so I will be available till 12 o'clock. Stay with me. Okay, along with me, try to prepare the questions, MCQs. Okay, so I will clarify your doubts. I will be here. I will be here, sir. Let's. So this is war room. I will be available for you. Okay, so start preparing now itself. If you are getting any doubts, let me know. I will explain. Okay, so I'm going in some process now. Okay, first of all, MCQs. Next, okay, so SCM chapter questions. Then DM MCQs, DM chapter questions. Next, so see 71 questions are just in time relates to inventory and the product handling systems. So this question, Kanban Japanese system under just-in-time approach ensures that continuous supply of inventory or product. Okay, so here they have given one more question, sir. That is, okay, this is this question related to backflash accounting. Okay, whatever it is. See, I will explain here itself. It uses just-in-time and backflash accounting. Okay, it does not use the raw material stock control account. Okay, 10,000 units were produced and sold. Okay, so the standard cost per unit is 150, for which includes material cost of 60 rupees. During September, 9,90,000 conversion cost were incurred. The debit balance in cost of goods sold account. So cost of goods sold account. So what is the standard material cost? 10,000 units into 60 rupees. That means 6 lakh is the material cost, sir. 6 lakh is the standard cost of materials. Now, so that means remaining 70 is labor cost. Okay. So conversion cost, sir. Okay, what is the conversion cost? What is the conversion cost means? Out of 150 is 60 is the standard material cost. What is the standard conversion cost, sir? 90 rupees. Okay. So standard material cost 6 lakh. Standard conversion cost, that is 10,000 into 90, 9 lakh. Okay. So actually they have incurred conversion cost of 990, but we have absorbed 9 lakhs only. That means under absorption 90,000 also there. Add this 90,000. Okay. 6 lakh plus 9 lakh plus 90,000, 15 lakh 90,000. That will be divided to cost of goods sold account, sir. Okay, so throughput accounting. Coming to throughput accounting, sir. So glass manufacturer of a large windows is experiencing a bottleneck in its plant. Setup time at one of its workstations has been identified as the culprit. A manager has proposed a plan to reduce setup time at a cost of 7,20,000. The change will result in 8,000 additional windows. 8,000 additional windows. The additional production will be 800 units. The selling price per window is 18,000. Direct labor cost is 3,000 per window, and other direct material cost 7,000. Okay, so assume all units produced are sold. What will be the change? Increase in throughput contribution. What is the throughput contribution, sir? Selling price 18,000 divided minus direct material cost 7,000. What is the throughput contribution per unit? 11,000. 11,000 per window is the throughput contribution. What is the total contribution? Number of units produced. Additional units are 800. 800 into 11,000. 88 lakhs. That is the change in throughput contribution. Next one, cost per unit under throughput accounting and marginal costing are mainly different because of, okay, so under throughput costing, for calculation of throughput contribution, sales minus material cost only, we won't consider labor cost. That means we are assuming like labor cost is the fixed cost. And coming to marginal costing, to calculate variable contribution, we do so subtraction from sales minus material cost minus so variable cost. That means labor cost also added in will be subtracted as a variable cost to calculate contribution. So what is the difference here means, here in marginal costing labor cost will be treated as a variable cost. In throughput costing labor cost will be treated as a fixed cost, sir. Okay, next question. This question was repeated, sir. Same model. We have also discussed previously. Repeated question. Okay, producing non-bottleneck output. If you produce non-bottleneck output, what will happen, sir? Inventory will be increased. Does not increase the throughput contribution. Okay, so just okay, backflash accounting question. Repeated. Japanese repeated. Okay. Companies that would benefit from the backflash accounting includes, okay, so a company is applying backflash accounting means that should follow the just in time system. When you follow just in time system, so lead time should be minimum. Option A. Backflash costing is most likely to be used when just in time inventory philosophies are adopted. Okay, now so benchmarking is, it's a continuous process, practice of setting targets. Okay, method to provide performance assessment. All three are correct. So now coming to standard costing, sir. Now coming to standard costing. Namaskaram, sir. Alok Pradhan. Hi, hi. Hello all. So how is the Josh? Are you able to understand or not, sir? I'm going in a little bit fast phase. Okay, are you able to understand or not? So please let me know. Please let me know, sir. Are you guys there? Now coming to standard costing. See, the information relating to direct material cost of a company is as follows. Standard price per unit, SP, standard price is 7.20. Actual quantity purchased in units, actual quantity purchased 1600. Standard quantity allowed for actual quantity, actual production units. Standard quantity is 1450. Okay, so and material price variance is given, sir. That is favorable 480. What are they asking, sir? Actual purchase price they are asking, sir. What is the material price variance? Material price variance is nothing but price difference. Standard price minus actual price will be multiplied with what, sir? Actual quantity. While calculating price variance, we have to consider actual quantity only. Why actual quantity? Means purchase manager will be responsible for whatever the quantity he purchased. So that's why material price variance is equal to selling price 7 point standard price, standard price. So actual quantity into standard price, actual quantity into actual price, sir. Okay, material price variance is equal to 480 positive. That's why I have taken this as a positive. Actual quantity 1600 into standard price 720. Actual quantity 1600 into actual price only. Okay, now this bring this term to the left side. 1600 AP, that is equal to, okay, so 1600 into 7.20 minus, bring this 480 to the left side, minus 480. AP would be, okay, 11,040 divided by 1600, 6.9 is the answer, sir. Okay, so next question. Alderholt uses activity based costing, allocate its overheads. The budgeted cost expected for the supervision cost pool was, budgeted units are given in the question, sir. Budgeted units, number of employees, budgeted cost also given. Okay, actual cost incurred, actual units 5,500, actual employees 77, actual cost is okay, so 8085. Total variance for the pool. Okay, that means here we have to calculate what, sir? Total variance. For total variance means standard cost minus actual cost. What is the actual cost, sir? Actual cost is the 8085. 8085. What is standard cost, sir? For the standard cost, we need to calculate standard quantity into standard price. What is the standard quantity? Here, number of employees is the quantity. So, budgeted number of employees is 75. This is for how many? So, here, for 5,000 units, 75 employees are budgeted, sir. 75 employees are for 5,000 units, sir. See, here they're following what, sir? Activity based costing system in standard costing. That means in standard costing, yes, Rohit Goenka, already I have shared this PDF in the group itself, I think. Okay, with the solutions, this PDF I have shared in the group, sir. See, as we are seeing standard costing along with the activity based costing system. Okay, so first of all, we have to calculate absorbed overheads under activity based costing system. Here, cost drivers are number of employees. Okay, so see, standard employees for actual output. What is the actual units producer? 5,500. If the standard employees budgeted, so employees is 75 for 5,000 units, how many employees should be for 5,500? That means 82.5 employees should be there. Okay. So now, what is the standard price, sir? Standard price per employee is budgeted cost 7,500 divided by 75. That means 100 rupees. What is the standard cost? 82.5 into 100, 8,250. What is the actual cost? 8085. The difference is 165 favorable, sir. 165 favorable. Okay. So standard cost minus actual cost. Actual cost is actual cost directly given in the question, but standard cost we have to calculate by using activity based costing system. Under activity based costing system, here the cost driver is okay, number of employees. As the cost is employee cost, okay, instead of taking units, taking number of employees is the more appropriate absorption, right? Okay. So next one, the following figures are extracted from the books of a company. Budgeted overheads are 10,000. So out of this 10,000, fixed are 6,000, variable are 4,000. Okay. So budgeted hours is 2,000 hours, sir. Actual overhead 10,400, fixed 6,100, variable is 4,300, actual hours are 2,100. Variable overhead cost variance, fixed overhead cost variance will be, okay, so they're asking separate variable overhead cost variance and fixed overhead cost variance. Standard absorbed overheads, variable absorbed overheads minus actual, fixed absorbed overheads minus actual overheads we have to calculate, sir. So actuals are given in the question, that's why we need to calculate standard. So to calculate standard, we have to calculate standard hours into. Okay, so what they have given in the question, sir? So hours actually they have given in the question. Absorbed overheads means actual hours into standard rate. What is the standard rate? Standard rate for variable overhead rate. Standard variable overhead rate. Variable overhead is 4,000 divided by budgeted hours 2,000. 4,000 divided by 2,000. Standard rate, variable overhead standard rate 2 rupees. Fixed overhead standard rate. Fixed overheads are 6,000 divided by 2,000. That means 3 rupees is okay. See guys, fixed overhead standard rate is 6,000 divided by 2,000, 3 rupees. Okay. Now how to calculate standard cost of okay, variable overheads and standard cost of fixed overhead. Here they have given hours. So to calculate standard cost based on hours, standard cost for actual hours. Okay, so actual hours is 2,100 hours. Okay, so 2,100 hours into so for variable overhead, recovered overhead is 2,100 into 2, 4,200. Actual is 4,300, 100 hours. Fixed overheads is okay, 2,100 hours into 3, 6,300 is absorbed or standard minus actual 6,100, 200 favorable, sir. Now coming to this question, the information relating to direct, so repeated question. The preparation and use of standard cost, their comparison with the actual cost and the measurement and analysis of variance. So nothing but standard costing, sir. So now coming to this question. Yes, 10 minutes, sir. We shall close this MCQs. In a factory where standard costing system is followed, the production department consumed 1100 kgs of material, 8 rupees per kg. The product X resulting material price variance of 2200 favorable. The material usage of variance 1000 adverse. What is the standard material cost and actual production of X? So what is the standard middle cost of actual production of product X, sir? So here we have to calculate what, sir? Standard cost. They have given what, sir? Two variances they have given, sir. Actual cost. So this is nothing but somewhat a reconciliation between. So if you start with standard cost, so what is the favorable variance, sir? If actual cost is less than standard means favorable. If actual cost more than standard means adverse. Okay, if you start with standard cost, subtract favorable variance to reach actual. If you start with standard cost, add adverse variance to reach actual. So standard cost minus favorable cost plus adverse will get actual. So but here actual is given. Okay, from actual, if you start with actual, subtract adverse, add okay, if you start with actual, what is the actual overhead, sir? Actual overheads is 1100 kgs into 8 rupees, 8800. Subtract 1000, subtract 1000, 7800, add 2200, 10,000. 10,000 is what, sir? Standard cost. Now, AB Limited uses standard costing system. The following information pertains to direct labor for product X. Standard rate per hour 8 rupees, actual rate per hour 8.40, standard labor hours for allowed for production, standard hours 2000 hours, labor efficiency variance also given. Okay, now they are asking actual hours worked. Okay, what is the labor efficiency variance? Labor efficiency variance is standard hours minus actual hours into standard price, sir. Okay, what is the standard hours? Standard hours minus actual hours into 8. Okay, labor efficiency variance is adverse. That's why I'm taking negative 1600. So, so bring this 8 to the left side. So 1600 by 8 minus 200. Here we have standard hours 2000 minus actual hours. Bring this actual hour to the right side, left side. Okay, this minus 200 to the right side. 2000 plus 200. 2200 is actual hours, sir. 2200. Now, uniform costing may not be successfully applied. So uniform cost can be applied where the product produced are similar kind of in nature. Okay. So in a single enterprise having number of branches, each branch manufactures set of products, same facilities can be applied. Uniform costing can be here, it can be applied. Number of entities in the same industry bound by the trade association. Okay, so can be applied. Number of units across the different geographical area, given set of products only producing. Yes, applied. Different branches, different products, you cannot apply uniform costing, sir. Option D. Okay, so this question somewhat like this is a standard question, 7 mark kind of question, sir. Go through this question. So answer is also there. You just try this question, sir. Next one, coming to question number 9. So Roan Limited is manufacturing SEMO using the standard costing system, providing the following information: direct materials. 1 ton of materials input yield standard output of 1 lakh. So input 1 ton, output 1 lakh units. Okay. So standard price of the material per kg 20 rupees. Standard price is 20 rupees. Actual quantity of material used in tons 10 tons. 10 tons actual quantity used. Actual price of material is 21. Actual output obtained for month 9 lakh. So okay, what is the standard quantity, sir? Standard quantity means standard quantity for actual output. What is the actual output? 9 lakh. For each 1 lakh units, how many tons should be used, sir? For 1 lakh units, 1 ton. That means 9 lakh divided by 1 lakh. That means we should standard quantity is okay 10 tons, sir. 10 tons means 10,000 kgs. Standard quantity is 10,000 kgs, but actually they have used 9,000 kgs. 9,000 divided by 1 lakh, 9 tons into 9 tons into 1,000, 9,000 kgs. But actually they have used 10 tons, that means 10,000 kgs. Standard quantity is 9,000, actual quantity is 10,000. What is the material cost variance? Standard quantity into standard price minus actual quantity into actual price. Standard price is 20, Actual price is 21. So calculate, you will be getting 30,000 adverse, sir. Next one, using standard costing provides the following. So information pertaining to direct labor for its product for the month of May 2023. Standard direct labor rate is 16. Standard rate 16. Actual rate 14.50. Labor rate variance 15,000 favorable. Labor rate variance 15,000 favorable, sir. Labor rate variance. So rate variance 15,000 favorable. Standard hours allowed for actual output 8,000. Actual, sorry, standard hours is 8,000. Actual output is 800 units, sir. How many direct labor hours required? Labor rate variance is given, sir. Labor rate variance is difference between standard rate minus actual rate into actual hours. We have to calculate these actual hours only, right? Okay. Now, what is standard rate? 16. Actual rate 14.50. What is the difference? Okay. So 1.50 is the difference. Now, so labor rate variance is 15,000. Favorable is given. That's why I am taking positive number. Now, this 15,000. So this 15,000 divided by 1.5, that is 10,000 is the actual hours. So now coming to this question, sir. A company is producing output X and Y uses the standard costing system. The standard costing overhead contains, okay, for X 3 rupees per unit, Y. So 2.25 per unit, standard cost per unit. The budgeted overheads are 860. Budgeted time is 3,440 hours. Actual output X 200 units, Y 100 units, sir. Standard price 3 rupees for Y 2.25. Actual time is 3,200 hours. Actual overhead series 875. Compute the overhead volume variance. So to calculate fixed overhead volume variance, standard cost or absorbed cost minus budgeted overhead, sir. So this is the key point here. In fixed overhead volume variance, in fixed overhead volume variance, yes, sorry, sir. Overhead volume variance, fixed overhead volume variance is standard overhead for actual output minus budgeted overhead, sir. Now, what is the standard overhead, sir? Actual quantity into X, standard X and Y, standard price 3, 2.25. What is the actual output produced? 200. So 200, 100. So that means standard overheads are 600 into triple, so plus 222. That means, sorry, 225. Okay, total standard overheads are 600 plus 225, that is 825. What is the budgeted overheads? 860. Standard overheads 825. The difference 35 adverse. Okay. A company uses standard absorption costing system. The following information is recorded by the company for October. So output and sales 8,700, 8,200. Selling price per unit 2631. Variable cost per unit 10. Total fixed overheads 38,800, 37,000. Sale so here some missing information is there, sir. Some is actual, one is standard, sir. This is standard, this is actual, sir. Okay, output and sales, standard and actual given, selling price, standard and actual given, variable cost, standard and actual given, total fixed overheads, standard and actual is given, sir. But they are asking what, sir? Sale price variance. How to calculate sales price variance? Hi, good afternoon, Padmavati Srinivasan. Okay, see, to calculate sales price variance, okay, but in case of cost price, so cost variance, standard minus actual, but sales is revenue, no, actual minus sales, sir. Okay, so actual price minus standard price into actual quantity sold. What is the actual quantity sold, sir? 8,200. 8,200 is actual quantity sold. Actual price is 31. Standard price is 26. 31 minus 26, 5 rupees into 8,200. 41,000 favorable, sir. Now, which of the following may be cause of material variance? All the above. Change in quantity of purchase and uneconomical size of purchase. Yes, reason. Failure to take advantage of off-season prices. Also reason. Change in basic purchase prices of material. Yes, also reason. Okay, variance analysis involves breaking down and analyzing the total variance to explain how much of variance is caused by using the resources that are different from the standards. Quantity variance. So this is option A, sir. Variance analysis involves breaking down and analyzing the total variances to explain. Option A. How much variance caused by using the resources that are different from the standards? Yes. How much of variance is caused by using the cost of resources being different from standards? The rate variance. Yes. Quantity variance and rate variance. All the above. Standard costing system consists of following key elements. What are the key elements, sir? Standard cost for each of the operations, comparing the actuals and standards, standard for each of setting standards, then comparing actuals and standards, then analyze. All the above, sir. Which of the following statement is correct? All the statements are correct, sir. Which of the following statements are true? Both 1 and 2 are true. Read those questions once. Theory only. Standard cost and budgeted cost are interrelated, not independent, sir. Why interrelated means based on the budgets we prepare the standards. So that's why they are interrelated, not interdependent. Okay, so just because of changing in budgets, okay, so our, okay, increasing the volume of budgeted output, okay, those will not change the standard for actual, right? That's why they are not interdependent. Efficiency ratio is nothing but standard hours divided by actual hours into 100. Higher the actual hours worked, higher will be the utilization ratio. Uniform costing, okay, this repeated. Uniform costing, a technique for costing. Okay, that's it, sir. This is all. These are the SCM MCQs. Okay, you can rely on these MCQs as these MCQs are picked from suggestion answers as well as MQP papers. So see, these MCQs I have picked from MCQ booklet as well as June 23, December 23, June 24, December 24 suggestion answers, and MQPs June 23, December 23, June 24, December 24, June 25. So all these MQP or MTPs are added. Okay. So these cover some of the study middle MCQs also. These models are more than enough, sir. This is the best source. You can rely on these MCQs. If you solve these MCQs, okay, definitely you would be able to answer at least in any worst case, at least 10 to 12 MCQs you could able to answer, sir. Okay, so prepare these MCQs. SCM MCQs just now completed, sir. Okay. Now, so break till 5:10, sir. Take a break till 5:10. Okay, so after the break, I will explain some questions in transfer pricing. Okay, so you guys start preparing transfer pricing, asset life cycle costing, product life cycle costing, okay, probability and target costing, along with this activity based costing system, throughput, just in time. Okay, so prepare these chapters and plus theory questions of chapter 1 and 2. These questions I will explain one question. So questions which you are going to take are sufficient for preparation. Okay, so I'll be taking some questions. For each chapter, I will take one question and try to explain the concept. Okay, so sufficient means at least you have to prepare so 50 questions, then it will be enough. Okay, so After the break, I will explain these questions. Break till 5:10. Okay, stay tuned. After that, after these questions discussion, okay, I will explain DM MCQs. DM MCQs, sir. Thank you all. Yes. Hi. Hello everyone. Welcome back. See guys. Yes. Hi. Hello everyone. Welcome back. See guys. Okay. So see, in question paper, question number 3, transfer pricing. So question number 3, part A, transfer pricing. Part B, asset life cycle, product life cycle, probability or target costing, sir. Out of these chapters, 2 questions can be asked. So now let's try to discuss some basic points in transfer pricing. See, in this transfer pricing chapter, so transfer price methods, okay, fixing transfer price range, limiting factors, strategic alternatives. These questions are important questions, sir. Yes, it will come, sir. One minute, sir. 1 minute. See, simulation Ramayana book problem. Yeah. So, hi Usharani, you are asking for simulation Ramayana book problem, right? Okay. That is the kind of question. Okay, that is somewhat lengthy question. See, supply and demand problem. Page number 0.9. Hi, Naim sir. Yeah. $10.09. Oh, this question, huh? Yes. Okay. So see, in simulation, first of all, there are two types of there are two types of questions, sir. One question is a single random number series. Second model is if in the question two series of random numbers are given. If in the question, so first of all, for simulation question, you have to check whether one series of random numbers are given or two series of random numbers are given. If two series of random numbers are given in the question, you have to write two series of random number range. Here in this particular question, they have given two series of random numbers. Okay, pairs of random numbers are given. So, first 31, 18, 63, 84, 15, 79, 07, 32, 43, 75, 81, 27. In this pairs of random number, first number represents supply, second number is for demand. Okay, so here in this question also, so supply, availability, number of days, demand, so number of days are given. So by using these two series, we have to write what's our random number range. So frequencies are given. Okay, so calculate total number of days. That would be around I think 400 days. No. So 500 days. So number of days, frequency is given, we can calculate probability. So probability is nothing but frequency divided by total frequency. 40 divided by 500, 50 divided by 500, calculate the probability. Next, random number range. So I think you all know how to write the range. Okay, so first of all, write two series of range, sir. Frequency, write cumulative. So from frequency, write the probability, cumulative probability, then range. Okay, we have written two series of range, right? So then by searching these numbers, so by searching first series of random numbers, Okay, write the expected supply by using second series of random numbers. Write the expected demand, sir. Okay, so yes, they have given how many pairs, sir? 6 pairs are given in the question. That means for 6 days we can estimate the supply as well as demand. These all are supply random numbers, these all are demand random numbers. By using these random numbers, estimate the supply, estimate the demand. Okay, so what they are giving in the question, sir? Okay, see, a smart buys the commodity 40 rupees per kg and sells at 60 rupees per kg. Any commodity remains at the end of the day has no saleable value. That means closing stock value is 0. Okay, if any unsold stock is there means the value is 0. Okay, moreover, the loss, unearned profit on any unsatisfied demand is, okay, if demand is not getting satisfied means 60 rupees per kg is loss. Okay, see, first of all, let's calculate. So here they're expecting us to calculate what, sir? From the following pairs of stimulate the sales, demand and profit. We have to calculate profit. Profit means what, sir? Sales minus cost. What is the cost here? Okay, purchase cost as well as loss on unsatisfied demand. So first of all, to calculate, so buying cost, purchase cost. What is the purchase cost, sir? If supply is there means all these units are purchased, no? All these units are purchased. What is the purchase cost? Okay, so 40 rupees is purchase cost, selling price is 60 rupees. Okay, so 30 into 40, 1200. So for supply, so how to get this buying cost means supply into 40 rupees. 40 into 30 into 40, 1200, 40 into 40, 1600, 20 into 40, 800, 10 into 40, 400, 30 into 40, 1200, 40 into 40, 1600. Okay, so this is a buying cost, sir. This is buying cost. Now, so what is the sales value? Sales value is nothing but how to calculate the sales value means we have to compare supply and demand. For the first day, let's say compare this first day supply and demand, sir. What is the supply on first day? 30 is the supply. Okay, what is the demand? 20. How many units we can sell, sir? Okay, so we have 30 units, but for 20 units only customers came. That means we could sell 20 units only. Okay, 20 into 60, sir. Okay, how much? 1200 is the sales. Okay, next for second day sales, compare supply and demand. Supply is, so here we have closing stock 10, but that is not having any value. Okay, second day supply is 40, demand is also 40. Okay, all the units could be sold. 40 into 60, how much, sir? 2400. Coming to third day, supply is 20, demand is 40. Demand is 40, but we have supply of 20 only. How many units we could sell? Only 20 units only we could sell. Okay, even the 40 customers came for 40 units, we have 20 units only. For remaining 20 units, unsatisfied demand. Okay, what is the sales? 20 into 60 is the 1200 is the sales. But for unsatisfied demand, there will be some cost, no? How much unsatisfied demand, sir? Here, 20 is unsatisfied demand. For that unsatisfied demand, 20 into 16 is the cost, sir. 20 into 16, 320 is the loss, unsatisfied demand loss. Next, fourth day, 10 is the supply, demand is 30, sir. How many units you can sell? 10 units only sell. 10 into 60, 600 is the sales, but unsatisfied demand is there, sir. 20 into 16, 320. Fifth day, supply is 30, demand is 40. How many units we can sell? 30. 30 into 60, 1800. Unsatisfied demand is there, 10. 10. Unsatisfied demand means what, sir? If demand is greater than supply, how much greater? That greater than value, excess value is called unsatisfied demand. Okay. How many units we can sell, sir? Supply or demand, whichever is lower, only we can sell. Okay. So fifth day, 30, 40. Unsatisfied demand 10 into 16 rupees, 160. Sixth day, supply is 40, demand is 20. We can sell how many units? 20 units. 20 units into 60, 1200. This is sales value. This is purchase cost. Total purchase cost. This is loss on unsatisfied demand. Sales minus buying cost minus loss on unsatisfied demand, we will get profit. That's it. Yeah, hi sir, Mandeep sir. Yeah. See next one, sir. So now, hope you got some clarity. First of all, in simulation question, identify whether that is single variable, single random number question, two random number question. If that is single random number question, we have to write single range only. Okay. So in simulation question will be solved by using two steps. Step 1, writing random number range. Step 2, simulation worksheet. In step 1, okay, see. So coming to step 1, so first column, decision variable, if frequency is given, frequency column, from frequency write the probability to, so cumulative probability, then write the range. Okay, so random numbers will be given in the question. Using that random numbers, find that random number in range. Okay, so check in which class interval the random number, particular random number falls. Okay, so respective value, variable value of that particular random number range is our expected value. So write random numbers and expected values. That is step number 2, sir. Okay, in case of two series of random numbers are there, means you have to write two series of range, two series of expected values. So then after writing expected values, we have to do some analysis based on the question. In some questions they will be asking us to write profit. In some questions they will be asking us to calculate so average demand, average profits, like that they will be asking, sir. Okay, so based on the question we have to do some adjustments. That's it. Now coming to this transfer pricing, sir. Same chapter, page number 10.6. I think you're asking for, so doctor patient problem. See, start time. You're asking for how start time 8 came, sir. Okay, so in the question, so see, generally that is our assumption. Okay, so our assumption is like, so doctor clinic is opened at 8 o'clock. Okay, you can take assumption if that was not given in the question. Okay, you can take assumption like clinic opened at 0.00 hours. Okay, on 0 time also you can take, but here, so basically this kind of doctor patient petrol bunk problems, in the question itself they will be giving, so assume the petrol bunk or else clinic opens at 8 o'clock, like that they will be giving assumptions, sir. Okay, so that's why we take 8 o'clock as an assumption. So coming to service start time, okay, here inter arrival time, for first customer inter arrival time is 1, and clinic opened at 8 o'clock. Okay, first customer entered into the queue 8 plus 7, 807. As for the first customer, doctor is free only, no, so immediately he will start the service. Service start time. Service start time. How to calculate this service start time means, start time 8 o'clock is an assumption. Okay, how to calculate this service start time means, okay, so we have to check, sir. We have to check. So for first customer, patient entered into the clinic at 8:07 a.m. At that time, doctor will be free only, so he can start the service immediately. So first customer service will end at 8:30. How we got this 8:30, sir? Service time 23. Okay, we have estimated this service time, sir, 23. Directly given in the question, 23. So 807 plus 23, 830, sir. Okay, so second customer entered into the queue. Okay, so after entry of first customer, second customer enter arrival time 21 minutes, 0.8.07 plus 21, 8:28. Second customer entered into the queue at 8:28. Okay. See, if you observe, immediately will he get the service? No. We have to check. So he entered in, second customer entered into the queue at 8:28, but at that time doctor is busy with providing service for the previous customer. Okay, so when the customer next customer service, when the second customer service will start, sir? Okay, entry time into the queue or else previous customer service end time, whichever is later, sir. That means doctor will be free after 8:30 only. Okay, so by the 8:30, so already there is a person, second customer in the queue. So 8:28 he entered, but his service will start at 8:30 only. Why? Means doctor busy with previous customer. Next, his service will end at 8:30 plus 37 minutes service time, 9:07. Third customer entered at 8:40. So third customer entered at 8:40, but doctor is busy with providing service to the previous customer 9:07. That means his service will start at 9:07 only. Okay, like that we have to calculate service start time, sir. So Irnima Banka, so can you please tell me the page number? December 2018 question. Yes, December 2018 question. Page number 10.8. The following was the pattern of demand of the cars rented out by the tourist operator observed for 100 days. Number of cars, number of days. Okay, so out of 100 days, okay, there is for 20 days 5 cars were rented, 30 days 7 cars were rented, 40 days 10 cars were rented, 10 days 15 cars were rented. Random numbers 88, 76, 10, 05, 23 required. So simulate the demand for over 5 days. So first of all, we have to create a random number range, sir. Okay, so number of cars, number of days. Number of days as frequency, write the probability. So probability is frequency divided by sigma frequency, right? Cumulative probability, then range. Starting with 00, here we have cumulative probability 20 no, and with 19. Next, as it is ended with 19, start with 20. Here cumulative probability 50 no, so end with 49. Like that we have to write the range, sir. After writing random number range, okay, here so 5 days are given. They are asking us to estimate the demand for 5 days. Day 1, day 2, day 3, day 4, day 5. Generally this is our step 2. Okay, so random numbers for 5 days, 88, 76, 10, 05, 23. Okay, so this 88 random number falls under, this random number 88 falls under which class interval, sir? Okay, 88 falls under, okay, 50 to 89 class interval. There the demand is 10. Okay, so next random number 76 falls under, so again this class interval only. Expected demand 10, sir. Next third random number 10, this falls under first class interval. Expected demand 5. Fourth random number 5. Okay, expected, so this falls under again first class interval, expected demand 5. So fifth random number 23. Again this 23 falls under which class interval, sir? So second class interval, expected demand is 7. 10, 10, 5, 5, 7. Part A is over, sir, part 1. Now, how many cars should the operator have in order to have at least 75% of probability of fulfilling the demand? Okay, so 75% of probability of fulfilling demand means out of 5 days, okay, out of 5 days, 75% of probability fulfilling means 5 into 75%, sir. How much, sir? 3.75 days. 3.75 days means, that means we have to satisfy 4 days demand. So we have to satisfy 4 days demand means, so see, so if you satisfy 3 days demand, that would be 60% only. If you satisfy 4 days demand, then that would be 75% of fulfilling the demand. Now see, so 4 days we have to satisfy the demand, sir. 1 day 5, second day 5, till 7 also satisfied. That means to get so to satisfy 4 days demand, 10 is also there. Okay, so that means if you maintain at least 10 cars, then only you can satisfy 4 days demand. So that's why in this case 10 cars, when there is a 100% chance. So if you maintain 10 cars, you could able to satisfy for all 5 days demand. There is 100% of chance of satisfying. So 75% of demand, sir. Sorry. Okay. If you maintain at least 10 cars in the store, then you can satisfy all 5 days demand. Are you getting this point? Okay, next, any doubts? Usharani, Yagnima, Jay Bala from Madurai, Naeem Sheikh, any doubts? Verma, sir, hi sir. Naeem sir, hi sir. Yeah, I'm also big fan of you, sir. Verma sir, Naeem sir. Raviteja sir. Thank you all guys. So see guys, start preparing now itself. If you are having any doubts, means please comment or else ask in Telegram group. I will explain, sir. Okay, if you are having any doubt with respect to any concept, Shubha Bharathan, clear. Thank you. If you are having any doubt, please, any problem, any chapter, please let me know. Till 6 or 6:30. So ask me doubts. Prepare your respective chapters. After 6:30, I will start at DM MCQs. Okay. Okay. So now, so in transfer pricing, so fixing minimum transfer price and maximum transfer price important, sir. So how to fix minimum fixing transfer price range, sir? How to calculate this minimum transfer price? So how to calculate this minimum transfer price means it depends upon capacity, sir. If transfer department is having a surplus capacity, if transfer department is not having surplus capacity, okay, if there is surplus capacity means, okay, minimum transfer price is variable cost only. That means fixed cost already, already had been recovered from existing capacity. No, so let's say for example the capacity is 1 lakh. Out of that 1 lakh capacity, we are already producing 60,000 units. 40,000 surplus capacity is there. That means fixed cost was already recovered from the 60,000 units. No, so that's why only to produce additional units we only incur variable cost. That's why if there is a surplus capacity, variable cost. No surplus capacity means variable cost plus opportunity cost. Sir, why opportunity cost, sir? If there is no surplus capacity, so if transferee department wants some products or goods means to transfer to transferee department. Okay, we have to sacrifice the external market demand, or else we have to increase the capacity. So in that situation, opportunity cost will be there, sir. Okay, so next one, maximum. So guys, in ICMAI workbook, see, in ICMAI workbook, so some different questions, some tricky questions were given, sir. Okay. So actually, I'm not expecting those questions will be come in the examination. Those questions will come in the examination. If you see, in assignment problem itself, some lengthy questions were asked, so given in the workbook. Okay. So the weightage of that particular chapter is 7 marks only, but that lengthy questions will be asked for 14 marks. How can this 14-mark question will be asked, sir? Okay. If you observe, okay, in last SFM also, no question from ICMA workbook was asked, sir. Okay, so many questions from Ravi sir Super 50 only came in the examination. Okay, so from our BCCA workbook only, so questions are coming, sir. How our BCCA workbooks are prepared means by taking last 10 attempt, 10 attempt questions, problems, and MQPs, study material questions. By taking these sources, we have prepared our workbook, sir. Okay, so these questions are enough. In this particular situation, you shall try to restrict yourself to these sources enough. Don't go and solve ICMA workbook questions, sir. Some crazy questions are there. Okay, I'm not expecting those questions will come in the examination. Why means in recent SFM examination also, workbook questions were not asked in the examination. So that's why, okay, so in this particular situation, restrict yourself to super 50 questions, sir. Be confident with those super 50. If you are having, so if you are perfect with those questions, okay, so then MCQs is enough to get more than 50 or 60. Okay. So game theory, I will explain game theory. Okay, so that's it, sir. That's it. So now don't go to the new sources. Okay, restrict yourself to okay past attempt MQP study material questions. So BCA workbooks over 50. This is enough. Okay. So how to fix maximum transfer price means if external market so maximum transfer price is nothing but external market price, sir. External market price. Okay, so that is maximum transfer price. Sir, how to purchase your book? Okay, you can purchase SCM and DM workbook in our BCCA app. So presently stock is not available. Okay, so if you are writing December attempt means okay, you can purchase your book, SCM and DM book. So after 10 days stock will be available. So we have taken some 500 books. We have printed some 500 books in recent times, recent within. So after releasing Sopardan itself, more than 500 books were sold. Okay, so now we are not having any stock SCM and DM, or else SFM stock was not there. Okay, don't. So those books are not available. After 10 days, you can purchase SCM and SFM books in our BCCA app, sir. Okay, now coming to game theory, sir. Yes, students are asking game theory question. So game theory graphical method, sir. Okay, solve the game represented by payoff matrix 1, 8, 3, 6, 12, 2, sir. Yes, answers will be, so question and answers will be given in workbook, sir. Solve the game represented by payoff matrix. So, first of all, so in any game theory problem, sir, first of all, we have to check for minimax maximin criteria. If that minimax maximin criteria is getting satisfied, means that is the value of the game. If minimax is equal to maximin, then that is the value of the game. That's it. Done. Okay. If minimax is not equal to maximin, then the matrix or payoff matrix is called as mixed strategy game. Then the game is called as a mixed strategy game, sir. In that mixed strategy game, okay, so we can solve the problem by using, so first one, odds method. So we can use odds method if and only if the matrix is 2 by 2 matrix. If matrix is not 2 by 2 matrix, we have to reduce the matrix by using, okay, so principle of dominance, sir. Even by using principle of dominance, if you are not able to reduce the matrix to 2 by 2, then we can use graphical method. This graphical method can be applied to matrix which is having 2 by n or m by 2 matrix, sir. That means at least 2 rows or else 2 columns should be there. Then only we can apply graphical method. That should be 2 by n or else m by 2 matrix. Then only we can apply graphical method. See, in this particular problem, first of all, by taking this problem, let's check minimax maximin criteria. Minimax maximin criteria, sir. First row minimum value 1, second row minimum value 2. Out of these two values, maximum is 2. So this is maximin. First column maximum 8, second column maximum 6, third column maximum 12. Out of this maximum values, minimum is 6, minimax. As minimax not equal to maximin, okay, the problem is mixed strategy game, sir. Now, in mixed strategy game, we can apply odds method. But to apply odds method, matrix should be 2 by 2. Okay, so that means we have to reduce the matrix to 2 by 2. So here let us try to apply principle of dominance, sir. We have to reduce one column, no? One column only we have to reduce. So columns are minimizing player strategies. Minimizing player will always select the strategy which gives the minimum values. Okay, let us compare one strategy, sir. So B1, B2, let's compare B1, B2. For first row, 1 is the minimum value. Okay, so minimizing player will select B1 here. If you compare second row, 8, 6, here he will select B2. That means no one strategy is dominating other, B1, B2, no one is dominating other, sir. Let's compare B2, B3. First row value, out of this 3, 12, 3 is the minimum. Minimizing player select B2. 6, 2, minimizing player will select B3. No particular strategy is dominating others. So B1, B3, 1, 12. So minimizing player will select 1. Okay. 8, 2. Minimizing player will select 2. Okay. No particular strategy is dominating other. In any combination, no strategy is dominating. So no column is dominating other column. So that's why in this situation we can apply graphical method, sir. Okay. So graphical method. Here, how many points are there, sir? Let's say here we have 2 rows. 2 rows from whose point of view, sir? 2 rows for maximizing player. Maximizing player has 2 rows. Okay. So each column, let's make it as points, sir. 18 is 1 point, 36 1 point, 12 2 is 1 point, sir. 18, 36, 12 2 are the points. Let's take A1 and A2 as 2 axes. This is A1, This is A2, sir. Okay. So on A1 take 1 to 12 points, A2 also take 1 to 12 points. Okay. Now, what is the first point, sir? 1, 8. A1, on A1, 1, A2, 8. So, 1 to 8. See, this is A2, this is A1 here. 1 to 8, sir. 1 to 8. Draw a line. Okay, what is the next point, sir? 3, 6. 3, 6. 3 on A1, 6 on A2. 3 on A1, 3 on A1, 6 on A2. Draw a line. Next one. What is the B3? 12, 2. 2 on A2, 12 on A1. 2 on A2, 2 on A2, 12 on A1. Okay, draw a line. Okay, so we have drawn 3 lines, sir. We have drawn 3 lines. Okay, now see. So, what is the criteria we are using for maximizing player, sir? We are using maximin criteria. What does it mean by maximin? First of all, we have to write minimum values. Out of these minimum values, we have to write maximum values. Okay. So first of all, here in this particular graphical method, identify the minimizing area. Identify the minimizing area. That means draw the area. Draw the area towards. So from this closed area, draw the area towards the origin. Okay, this is the minimizing area. In this minimizing area, what is the maximizing point? Okay, this is the point. Peak point is there, no? This point is the peak point. Okay, this peak point is intersection of what and what line, sir? This peak point is intersection of B2 B3. Okay, not an intersection of B1. This intersection is B2 B3 line intersection, sir. That means we can keep B2 B3 and eliminate B1, sir. Are you getting this point, sir? Okay, as matrix is having 2 rows only. 2 rows means 2 rows. True strategies are from maximizing player point of view. Here we have drawn the graph in maximizing player point of view. Okay, A1 one line, A2 one line. So connect the points. We will be getting 3 lines. Okay. As so maximizing player, we have to identify maximin. Maximin means minimizing area. Minimizing area is okay. So draw the area for each point. So identify the area downward direction. That means this is the total area downward direction, sir. Okay. So in this area, peak point is maxi min. So this is the intersection of B2 B3. Eliminate B1, keep B2 B3. Now we have 2 rows 2 columns. Apply odds method. That's it. Any other doubts, sir? Bhava Tharini, any doubts? Are you okay with that? Linear programming, December 2019 question. Page number 6.11. Okay, see, read this question once. Okay, so LP model question, sir. LP model rating, December 2019 attempt question. Navabharat Industries Limited manufactures 4 products 1, 2, 3, 4 on 2 machines X and Y. The time in minutes to process 1 unit of each product on each machine is shown below. Machine X, machine Y, sir. Okay, product 1, 2, 3, 4. Okay, what are they have given, sir? The time in minutes to process 1 unit of each product. Okay, to process 1 unit of each product, times are given in the table, sir. Profit per unit of each product is 1, 2, 3, 4, 120, 150, 190, 100, sir, respectively. Product 1 must be produced on both the machines X and Y, but products 2, 3, 4 can be produced on either of the machines. Okay, this is the key point here. This is the key point, sir. Product 1 can be produced, so 1 has to be passed through machine X and machine Y. That means to produce 1 unit of finished good, it must be processed 12 minutes in X, 26 minutes Y, then you will get X1 units as output. Now coming to product 2. Okay, if I work for, so 15 minutes in machine X, we will get X2 as output, sir. If I work for 19 minutes in machine Y, I will get Y2 as output. Let's say, so some units as output. That means machine, so product 1 has to pass through X and Y. 2, 3, 4 can be produced either of the machines. Are you getting this point? Okay. Now, due to acute space constraint, the company works only 1 week production is stored in the only 1 week's production is stored in the 4,000 square feet for floor space, sir. 4,000 square feet floor space, where the floor space taken up by each product is square feet. So for product 1, 1, product 2, 1.5, 3, 5.0, 4, 0.50, for product 1, 2, 3, 4 respectively. As per customer requirement, output of product 2 is related with that of product 3. Okay, so for a week, approximately twice as many as units of product 2, sir. Okay, product 3 is twice of product 2, sir. That we will discuss, sir. Okay, twice of product 2 should be produced as product 3, sir. That means if product 2 produced 1 unit, product 3 should be 2 units twice. If product 2 is produced 2 units, product 3 should be 4 units twice. That's the link they are giving. Mission X is out of action, for instance, because of breakdown. 8% of time and Mission X is out of action for maintenance and because of breakdown. Okay, 8% of time. And mission Y 10% of time, idle time, sir. Okay, maximum available hours, assuming working for week 42 hours. Working 42 hours, sir. Okay, so mission 1 is out of action for 8% of time, means actual working hours are 42 into 92%. Remove that 8% idle time. 38.64. Likewise for mission Y, 42 into 90 percentage. Now come here. See, first of all, before writing objective function constraints, hangout CA. Okay, sir, I will share. Okay, so see, before writing objective and constraint functions, we have to take variables, assume the variables. Let's say, for example, for product 1, sir, product 1 has to pass through X and Y, then only X1 units are produced. Now, X1 is the number of units produced on mission X and Y. Okay. Now, product 2, either X or Y, we can produce. X2 is the number of units produced. Product 2, number of units on X. Product 2 on mission Y, Y2. Okay, total production of second product is X2, Y2. Product 3, X3 is the number of units produced on mission X. Y3 is the number of units produced in mission Y. Okay, product 4, X4 is the number of units produced on mission X. Y4 is the number of units produced on mission Y. Total product 4 production is X4 plus Y4. Let X1 is the units of product 1 which must be produced on both missions. X1 is the units of production of product 1 which must be produced on both the missions. X2 is the units of product 2 produced on mission X. Y2 is the units produced in units of product 2 produced on mission Y. Like that, X3, Y3, X4, Y4, we have to take the variables. Now, so product 1, 2, 3, 4, sir. Take this product 1, 2, 3, 4. What is the profit given in the question? 120, 150, 190, 100. Space constant is there, no? 1.0, 1.5, 5.0, 4.0.5. Total space is 4,000 square feet. Now, mission X maximum available hours are 42 into 98 in minutes into 60. Okay, mission Y maximum available hours are 42 into 90% into 60. Okay, so now, so let us write what is the objective function. Objective function is profit maximization. Okay, maximize Z equal to. Okay, what is the profit of product 1, sir? 120. 120 is the profit. How many units of 1 will be produced, sir? X1 units. 120 X1. Okay, product 2 profit is 150. 150 into, so product 2 total output is X2 Y2. 150 into X2 plus Y2. Likewise 190 into X3 plus Y3. Likewise 100 into X4 plus Y4. Okay, so next one, constraints. Space constraint. So product 1 unit will take 1.0 space, sir. We are producing X1 units of product 1. X1 into 1.0 into X1. 1.5 into product 2 units are X2 plus Y2. 5.0 into, okay, product 3 production units are X3 plus Y3. 0.5 into X4 Y4. So maximum space is 4,000 square feet. That's why less than or equal to 4,000. Now coming to hours. Okay, on mission X 12 for product 1 12 hours, product 2 15 hours, product 3 18 hours, product 4 10 hours given in the question, sir. Okay, here they have given 12 15 18 10. Okay. Okay, I produce X1 units on mission X. On mission X we produce product 1 X1 units, so into 12. So on mission 2, so on mission X product 2 15 minutes into X2. On mission X X3 18 into X3. Okay, on mission X product 4 10 into X4. Total less than or equal to 42 into 98% into 60, sir. Okay, so on mission X, that's why we are taking X1 X2 X3 X4 only. Okay, on machine Y 26 Y, so X1 we have to take, sir. This is X1, sir. Why X1, sir? On machine X or machine Y, so product 1 should be passed through X and Y, no. So that's why we are producing product 1 as X1 units only. So on 19 into Y2, 30 into Y3. Okay, 26 into X1, 19 into Y2, 30 into Y3, 35 into Y4. So you have to observe, okay, for product 1, here X1, here also X1. But for product 2, here X2, it is Y2. For product 3, it is X3, it is Y3. For product 4, it is X4, it is Y4. Okay, total hours available 42 into 90% into 60. Okay, so customer request. So customer requesting is like approximately twice as many units of product 2 should be produced as product 3. Okay. See, so product, see for example, product 3, product 1, product 2, sir. If I produce product 2 as 1, product 3 should be 2, twice, no. If I produce product 2, 2 units, product 3 should be 4, no. If product 2 is 3, product 3 should be 6. That means product 3 is equal to 2 into P2. What is the production of P3? X3, Y3. That is equal to 2 into X2 plus Y2. Customer request constraint. Non-negative constraint X1, X2, X3, X4, Y2, Y3, Y4 greater than or equal to 0. This is non-negative constraint. Okay. So next one, crashing. Crashing some. Okay, so in network analysis, for every December attempt, crashing question is being asked. For every June attempt, program evaluation review technique question is being asked as per past papers. Okay, so likewise, we can also expect for June attempt, program evaluation review technique or else other questions. In previous attempt, December attempt only, they have given crashing question. Okay, anyway, so as some students are asking, we shall so go for crashing question. See guys, whenever you are doing a problem of crashing, you have to check, you have to ask two questions, sir. Question 1, question 2. So, what is question 1, sir? Which path to be crashed? What is question 2? How many days to be crashed? So, how to decide which path to be crashed, sir? How to decide which path to be crashed? How to decide which path to be crashed means, okay, always crash critical path, sir. Okay, so in critical path, we will be having multiple activities. Out of those activities, which activity to be crashed? Activity with the least crash cost should be crashed, sir. Activity with the least crash cost should be crashed. Okay. So now, how many days to be crashed, sir? How many days to be crashed means to calculate how many days to be crashed. So to decide how many days to crash means, okay, there are two rules, sir. Check days available for crashing. Once a critical path, always a critical path. These are all two questions, sir. Now, so now here in so crashing we write three tables, sir. So first one is path table. Why this path table, sir? To identify the critical path and to check once a critical path, always a critical path. Table 2 slash table to identify activity with least crash cost and to check number of days available for crashing. Table 3 evaluation table. So in this table itself we write we do the crashing, sir. Now See here, I am explaining December 24 attempt question, sir. December 24 attempt question. See, Rontech Limited, an engineering firm, won a contract to install an instrument landing device at local airport. The complete installation can be broken down into several separate activities. Okay, so install an instrument landing device at the local airport. The complete installation can be broken down into the several separate activities. Each activity labeled A to G, its a predecessor activities, normal time, crash cost, and all, everything is given in the table, sir. See in this table. Yeah, hi Varsha, I have explained SCM MCQs at the beginning of this session. Okay, so after this question, I will explain DM part MCQs. Okay. See guys, this is crashing question. In this question, activities and preceding activities are given in the question, sir. A, B, C, D, E, F, G. Okay, how many activities are there, sir? 6 activities. 1, 2, 2, 4, 3, 2, 3, 2, 5, 4, 6, 5, 6, 6, 7. Preceding activities are also given. Normal days, crash days, normal cost, crash cost. Now let us try to understand what is this normal duration, crash duration, normal cost, and crash cost. Okay, see, normal duration. Normally, activity A can be performed in 7 days. For that, okay, so cost is 500 rupees, sir. 500 rupees. Normal days. To perform this activity A in 7 days, the cost is 500. So for activity A, we can reduce the duration, normal duration from 7 days to 5 days. That means we can reduce the 2 days. Then cost will be increased from cost will be increased from 500 to 900. That means what, sir? Just to reduce 2 days in duration, we will incur additional cost of 400, sir. Just for 2 days reduction, we will incur 400 additional cost. That means for each day, how much is the additional cost, sir? This is 400 divided by 2, that is 200. This 200 is called cost slope, sir. Cost slope. So cost slope is nothing but change in cost divided by change in time, sir. Change in cost divided by change in time. Okay. So likewise, we have to calculate crash cost or cost slope for each and every activity. That is nothing but what, sir? Crash cost per day required. Design the project network and indicate all paths through it. First of all, we have to draw the network diagram. So what is the first activity, sir? 1, 2. So it is not having any preceding activity. That's why first of all draw activity A 1 to 2, sir. So the duration is normal duration 7 days. Next 2 to 4, 2 to 3, 2 to 5. We have 3 activities here. 2 to 4, 2 to, so B, C, D, 3 activities. 2 to 4, 2 to 3, 2 to 5. So B, C, D, take 3 activities like that, sir. Now, now from 4, draw 6, 5 to 6, 4 to 6, 5 to 6. Okay, so from this 4 to 6, 5 to 6. 4 to 6, 5 to 6, then 6 to 7, sir. From 6 to 7. Okay, so here, see, so leave about these numbers. Now see, A is not having any preceding activity. B is having A as preceding activity. C is having A as preceding activity. D is also having A as preceding activity. That means from activity A itself, 3 activities can be started, sir. After completing A, we can start A, B, C. So B, C, D, 3 activities. Okay. Now E should have B and C as preceding activities, sir. E should have B and C as preceding activities. If I draw E like this, okay, it should have the B and C as preceding. No, that's why take dummy like this. Next one, F should have C and D as preceding activities. Okay, so draw F from here, connect these dots, connect E and F. Then final activity G, sir, from E and F. Okay, you can also draw activities like this, and from that dummy, by using dummy, you can also draw G. Okay, so that is a network diagram drawing. In that, so on each activity represent the time duration. So write all the paths A, B, E, G. Okay, A, C, E, G, A, C, F, G, A, D, F, G. So write all these paths. For each path, calculate the duration. Okay, the path which is having highest duration is called critical path, 25 days. So the project duration is 25 days, sir. Assess the critical path and normal duration. First 2 points is over, sir. Now evaluate the percentage of increase in cost to complete the project in 21 days. Now critical path duration is 25. That means project duration is also 25. Now they are asking us to, so whether we can complete the project in 21 days or not. For that we have to do crashing, sir. In crashing, what is our step 1, sir? In crashing, what is our step 1? So what is our table 1, sir? Table 1 is critical path, path table, sir. Here write all the paths, time durations. Okay, so table 2 is slash table. In this slash table we write what, sir? Okay, so activities, crash days available, and crash cost per day. Here for activity A, crash days available from 7 to 5, 2 days available. From 4 to 5, okay, -1. From 5 to 5, 0 days available. 6 to 4, 2 days available. 7 to 4, 3 days available. 5 to 2, 3 days we can reduce. 6 to 4, 2 days we can reduce, sir. Okay, so difference in cost divided by difference in duration, we will get this cost slope. After writing this cost slope, table 3 evaluation table, sir. Okay, so evaluation table, stage, particular, remarks, crash cost. Okay, now so the step 1, stage 1 crashing is okay. Now so what is the critical path? So here before starting the crashing, you have to decide what, sir. 2 questions are there. First question, which path to be crashed? Critical path. Write the critical path here. Okay, so in critical path, A, C, E, G is the critical path. In critical path we have A, C, E, G, 4 activities, sir. What is the cost? Crash cost of A, C, E, G. For A, crash cost is 200. E is not having any crash cost. E, G, 2. So for E it is 100. G it is 400. See, now in this critical path we have 4 paths. Out of these 4 paths, which path to be crashed, sir? Okay, so sorry, out of these 4 activities, which activity to be crashed, sir? The activity which is having least crash cost should be crashed, sir. E is having least crash cost, so crash E, sir. Now how many days to be crashed, sir? For that, check availability of days. E can be crashed for how many days, sir? 3 days. 3 days can be crashed. But so you have to check once a critical path, always critical path. If I crash this E by 3 days, this 25 becomes what, sir? 22. Okay. So then this 22 becomes 24 also, as we have E here, this 24 becomes 21. Okay. But this will be 23, this will be 24 only. Okay. Then ADFG will become critical path, sir. So that's why we cannot crash this path by 3 days. We can only crash. Okay. So Here the critical path 25 days, next critical path, next highest day is 24. That means we can crash one day. Are you getting this point, sir? Okay, so to decide how many days to be crashed, okay, so first of all check how many days available for crashing for that particular activity, and once a critical path, always a critical path. If you crash this activity E by 3 days, even though 3 days are available, okay, if I crash, what will happen, sir? This becomes 22, this becomes 21, then this becomes the critical path. As we have E here, this becomes 22, this becomes 21, this becomes critical path. This path is losing its critical path. Once a critical path, always a critical path. That's why we should not crash this critical path for 3 days, sir. How many days we can crash, sir? Okay, 25. Next we have 24, no? So that's why crash one day. Now write crash activity E by 1 day. If I crash E by 1 day, what will happen, sir? This 24 becomes 23, 25 becomes 24, 23, 23 only, 24, 24 only. Now if you observe, we have how many critical paths, sir? 2 critical paths are there. Okay, so stage 2. After writing this, after writing stage 1 crashing, update the table, sir. Update the table. For E, available days. Okay, 3 days originally available. We have used 1 day. That means 2 days available now. Okay, so now enter into the second stage of crashing. We have 2 paths here. In second stage of crashing, after each stage of crashing, we have to check 2 questions, sir. Which path to be crashed? Critical path. How many critical paths are there? 2 critical paths. In 2 critical paths, whenever there are 2 critical paths, okay, so we can crash common activities, or we can crash common activities from both the paths, or else okay, so uncommon activities from each activity. One uncommon activity from first path, one uncommon activity from second path. That means what are the common activities, sir? Here we have A and A, common activity A, G and G. Okay, common activities. You can crash either A, 2 paths will be crashed, or G, 2 paths will be crashed, or else uncommon activities. C, in first path we have C, D, second path we have E, F, sir. Okay, for C, crash days are not available. This option is not available. That means in first path D, second path E, or else first path D, second path F. ED, or else sorry. In first path we have CE, second path we have DF as common activities. From C, okay, from C it is not available for crashing. That's why, okay, from first path E only we can crash, sir. E, D, or else EF. In this combination, each we act one day we can crash, sir. Are you getting this point, sir? Okay, we have to crash these 2 paths simultaneously. You can crash common activities A, or else common activity G, or else uncommon activities CE, DF. One from first activity, one from second activity. As C cannot be crashed. Why means crash days are 0 for C. So that's why C is not available for crashing. We can take uncommon activity E in first activity, D in second activity, or else E in first activity, F in second. So E in first path, D in second path. E in first path, F in second path, sir. Okay, so write the cost, sir. First alternative A, 200 is the crash cost. Second G, 400 is the crash cost. ED alternative. For E, what is the crash cost, sir? For E, the crash cost is 100. D, crash cost is 100. Total 200 is the crash cost. Okay, next one. EF. E, crash cost is 100. F, 200. Total 300. Okay, we have 4 alternatives here. In these 4 alternatives, we have least cost 200 for A, 200 for ED, and also next least is 300, next least is 400. 1, 1, 2, 3 is the preference ranking. Okay, now we shall crash. So we have to crash critical path, 2 paths. Which activity to be crashed? The activity which is having least crash cost. We have 2 alternatives here, A or ED. We can crash any alternative, but I'm taking A. Why means this is having least crash cost, no? Okay, so I'm taking which alternative, sir? We can take we can crash A or else ED, sir. A by 1 day or else ED each by 1 day. So I'm taking A, sir. Crash A by how many days, sir? Crash A by how many days? Crashing days available for A is 2 days. Okay. Now, if I crash activity A by 2 days, what will happen, sir? All the paths will be crashed. 23 become 21, 24 become 22. So 23 become 21, 24 become 22. Then the critical paths would be 22, 22. So there won't be any problem. So crash A by 2 days. Crash A by 2 days. What is the crashing cost? 2 days into 200, 400. Okay, here in previously 1 day we have crashed E 1 into 100, 100 is the crash cost. Now, so after second stage of crashing, update the table. We have used A 2 days, available days is 0. Okay, update this crash days. We have crashed A no 32, 21, 24 to 22, 23 to 21, 24 to 22. Okay, now finally. So next one, stage 3 of crashing, sir. So what is our target, sir? Initially our, okay, so project length is 25 days. Our target is to reduce the project length to 21 days. That means we have to crash 4 days. We have already crashed how many days, sir? E by 1 day, D by 2 days. Okay, now we have to crash one more day. For that one more day, take this alternative, least cost alternative. E by 1 day, D by 1 day. Okay, so in third stage of crashing, how many, which path to be crashed? Two critical paths are there, two should be crashed. Okay, so how many days to be crashed? For two paths, this is also the ranking. First rank, this was used, no? Okay, so with first rank, another alternative ED we can use, sir. Crash E by 1 day, D by 1 day. We have to check whether 1 day is available for E and D or not. E, yes, 2 days available, use 1 day. For D, 2 days available, we can use 1 day. If I crash E by 1 day, D by 1 day, what will happen, sir? Okay, so E by 1 day, 21 becomes 20. E by 1 day, 22 becomes 21. F, so E by 1 day, F by 1 day. Sorry, D by 1 day, right? E by 1 day, D by 1 day. Here we are not having any D. So 21 becomes 21 only. D by 1 day, 22 becomes 21. That means, okay, so these two paths will be critical paths after so crashing also. So that's why, so new critical path emerges, but not an issue. These two paths will be critical path only. Okay, see, now crash E by 1 day, D by 1 day. So crashing cost is 1 day into 200. Then apply, so update the tables. E by 1 day, 1 day is available. D by 1 day crash, 1 day is available. Update this table. Okay, after this crashing, okay, so what is the project duration? 21 days. Okay, what is the total cost incurred for this 4 days crashing? For first day crashing, 100 rupees. Okay, for next 2 days crashing, 400. Next crashing, 200. Total 200, 400, 100. Total 700 is the crashing cost, sir. Normal cost is 4,500. Add the cost 700. Okay, percentage increase in cost is 700 divided by 4,500. 15.5 percentage is 5 is increasing in cost, sir. Sir, Z values will be given in the question. You don't worry, sir. Okay, for particular problem, so in examination they will give Z values, sir. Z values will be given in the question itself. Okay, otherwise they should give standard normal table like logarithm table. Standard normal tables will be there. That will be given, sir. You don't worry. Yes, in previous attempts, okay. Simulation question, compulsory question is being asked in any exam, sir. Okay, guys. Next, so I would like to start MCQ, sir. Like June 2024 attempt question Z score from 0 to Z. How to take that values? Okay. So if Z value is given from 0 to Z, that means, see, this is standard normal curve, sir. At this straight line, Z value will be 0. 0 to Z means, let's say for example, in your calculation, you got Z is equal to Z equal to 1 at that the value is let's say for example you got something like 0.34, table value is 0.3413, sir. Okay, so let's say for example Z value 1, table value is 0.3413. Okay, so now this is the total probability, right? So that area represents this one. 0 to Z, that means from 0 only we have to, Z is positive, no, take right side value only. In standard normal curve, this is 50%, this is 50%. Okay, as 0 to Z is given in the question, 0 to Z means from central line to positive side. If Z is the positive, okay, so from the central line to right side take the value. If Z is negative, from the center line to left side take the value. Okay, this total right side value is 0.5, this total left side value is 0.5, sir. Now let's directly go to the MCQs, sir. MCQs, bullet MCQs. Here I will try to explain. So first of all, tools for data analytics, sir. From this chapter, definitely 2 MCQs will be asked. So after that, I will explain network analysis questions. Okay. So see, tools for data analytics, question number 215. Which of the following is not the features of JEDOX tool? Okay, so B and C. B analytics platform allows user to use it. So first one is the feature of JEDOX tool. So JEDOX tool is enterprise performance management tool. Okay, so deployable in cloud as well as on premise server on hybrid basis. Okay, that is the feature. Next two are not the features. Tableau is a business intelligence tool visualization tool, sir. Which of the following statement is not correct? For data analytics purpose, ETL tool is same for that of ELT tool. That is not correct. Okay, which of the following statement is incorrect? None of the above is incorrect. Prescriptive analytics is very important because prescriptive analytics means it prescribed about the future. What action to be taken in the future, this will tell, sir. Which of the following has no relation with business analytics? Business intelligence. ABS glue is a tool used for the purpose of business intelligence. Okay. So which of the following is financial data analytics? All the above are used for related to financial data analytics, value driver analytics, financial ratio analysis, predictive sales analysis. Okay. So next one, analysis of data set has revealed that fact that profit of business has reduced for the financial year 21 to 22. What category of data analytics it comes under? Descriptive. Okay, why means we are describing about the past. Script and many times asked in the examination, sir. Script and is related to which type of programming language? Python language. Which one of the following is key feature of SAS language? 3 times given in the examination. Capability of handling data analysis, capability of report formation and perform graphs, perfect graphs, capability to capability to interact with multiple host systems. All these 3 are what are key features of SAS language. Which one of the following is not a spreadsheet? eView is not a spreadsheet. Okay, so read these theory questions 2-3 times, sir. Okay, we have to remember these questions. Definitely 2 questions will be asked from these questions. Now coming to network analysis, sir. From network analysis itself 2 questions will be asked, so that's why I don't want to waste your valuable time. So I will explain this network analysis questions first. See, so network analysis, critical activities, sir, will have 0 float, sir. In PET chart, activity time distribution is beta distribution. The time by which activity completion time can be delayed without affecting start time of succeeding activities. Free float will not affect the succeeding activities. Free float will not affect the succeeding activity start time. Independent float will not affect the preceding and succeeding activities total float or start times. Which of following statement is not true? PERT is deterministic in nature. In PERT we use probabilities, probabilistic. CPM probabilistic. PET network can be crashed, wrong. All they are incorrect. The amount of time by which an activity can be delayed without affecting the project completion is called total float. In project planning, free float can affect which of the following? Free float will not affect the succeeding activity. Free float can free float means which will not affect the succeeding activity start time. That means which can affect the preceding activity float or start time. Solution of problems of crashing has to be started by applying the technique on crashing should be done on critical activities, sir. Reduction in project time normally results in increase in direct cost, decrease in indirect cost. As we have to reduce the time duration of the project, we have to employ the additional resources, additional labor, additional machinery. Direct cost will be increased, indirect cost will be reduced, sir. 161. Okay, for this draw the network diagram, identify the paths. Okay, so next one, activity ADF merge at event 6. If earliest start time of ADF are respectively 13, 17, 8, then earliest time of event 6. Earliest start time of event 6 is nothing but okay, so latest finish time. So that means higher time of okay. So A will be completed on 13, sir. So D will be completed on 17. F will be completed on 8. After completing these 3 activities, then only this activity will be started. That means whichever is later, D 17, sir. The slack times of tail and head events of activity P are 10 days and 4 days respectively. If free float of activity P is 12 days, then so free float, this is activity P, tail event slack 10, head event slack 4. Free float is equal to 12. Now they are asking what, sir? Total float would be, total float is equal to free float plus head event slack. Okay, so free float, how can we calculate free float? Total float minus head event slack. Bring this head event slack to left side. Total float is equal to free float plus head event slack. 12 plus 4, 16. Okay, so next one, come to this question, sir. For an activity, the pessimistic, most likely optimistic times are respectively given. So expected time duration formula is T is equal to TP plus 4TM plus TO by 6. Okay, variance is being asked, sir. So sigma square is equal to TP minus TO by 6 whole square. This is the formula. So most probably, so this is the question we need to understand, sir. A pet network has 9 activities on its critical path. The standard deviation of each activity on critical path is 3. The standard deviation of critical path is, each activity standard deviation is 3, sir. For critical path standard deviation, we should not directly add standard deviation. So write each activity variance, then only we have to add variances of each activity. Okay, so standard deviation, first pass standard deviation 3, variance is what, sir? Standard deviation square 9. Each activity standard deviations are 9, 9, 9, 9, 9. 9 activities are there. 9 into 9, 81 is the total variance of, total variance of critical path. Now, standard deviation of critical path, square root of variance, square root of 91, you will get 9. Okay, so standard deviation, same formula, sir. Only 3 formulas are there. Expected time, TE is equal to TP plus 4TM plus TO by 6. Okay, standard deviation TP minus TO by 6, variance TP minus TO by 6 whole square. Okay, free float is equal to total float minus head event slack. So independent float is equal to free float minus tail event slack, or else total float minus head event slack minus tail event slack. These, on these formulas only questions will be asked, sir. Okay, so one more question is there in December. So June 24, December 24. Consecutively in 2 attempts they have asked this question, sir. The normal duration, normal cost of an activity are 10 days, 350. Normal days 10, normal cost 350. Crash days 8. So crash duration is 8 days. So what is the crash cost? If cost slope is if cost slope is 75 per day, okay, cost slope is given. Okay, so they're asking what, sir? Cost slope is equal to change in cost divided by change in time. Change in cost means crash cost minus normal cost. Change in time means normal time minus crash time. Okay, so that means crash cost would be, how much would be the crash cost, sir? Crash cost would be, so crash cost means it increases the cost more than normal cost, right? That means to this normal cost 350, add how many days are decreasing, sir? 2 days. We are reducing 2 days. Cost slope means for each day 75 will be the cost. 2 into 75, 75, 150. 350 plus 150, 500. Or else you can use this formula. Which of the following is incorrect? Both PERT and CPM are event oriented. Wrong. PERT is event oriented. CPM is activity oriented. Okay. Some theory questions are there, sir. The activity that must be completed prior to the start of activity is called predecessor activity. Which of the following represents reduction in project duration? Crashing. Critical path method, large projects only applied. Okay, optimum duration means which gives the minimum total cost for completion of the project. Which of the following is not a challenge scheduling the project? Independent activities. Independent activities that will not depend upon other activities, that can be scheduled freely, executed so simultaneously. Okay, that's it, sir. Okay, see, See, once again, sir. In DM part, I shall try to explain. Okay, so in DM part, I have explained so chapter 15 and network analysis question, sir. Now we shall go to the maxima minima question, sir. Maxima minima. So maxima minima optimization is method of finding what, sir? Maximum point, minimum point, critical point. Choose the correct answer. Optimization problem should have only one objective function. Yes. So optimization should have only one object only. The process of finding relative maxima or minima is known as optimization. For a cost function TC, what is the marginal cost? Okay, TC is given, sir, TQ square 7Q plus 12. How can we get marginal cost, sir? Marginal cost is first derivative of total cost. What is the first derivative of total cost? 3Q square derivative, 3 into Q square derivative, 2Q, 6Q, 7Q derivative, 7, 6Q plus 7, 6Q plus 7, sir. Okay, so marginal revenue is first derivative of total revenue. In the expression D is equal to AC minus B square. See, so in two variable optimization, okay, so first of all we calculate first derivative fx, fy, sir. So then we have to calculate second derivatives. Fx with respect to x, fxx, fx with respect to y, fxy, fy with respect to x, fyx, fy with respect to y, fyy. So out of this fxx is fxx is A, fwy is C, fxy, fyx are B, sir. This is how we take A, B, C. D determinant is AC minus B square, sir. In that AC is what, sir? Second order derivatives. Nothing but second order derivatives, sir. Second order derivatives of function f with respect to x and y. B, C, D are not correct. Price discriminating monopolist firm operates in market where sole supplier, more than one market where it sells a product with different prices. All of the features of monopolist firm. If two plants are there with single market. Two plants single markets are there means two plants, total cost 1, total cost 2 and total revenue will be there, sir. Then marginal cost 1 is equal to marginal cost 2 is equal to marginal revenue. This is the equilibrium point, sir. Next one, here we have. So this question, correct this question, sir. This is not 3, 1 by 3. Total revenue is given, sir. Marginal revenue also given. What is the number of quantity? Okay. What is the marginal revenue? First derivative of total revenue. 1 by 3 into x cube derivative. 1 by 3 into x cube derivative. 3x square. 3 cancel. X square. Okay. So minus x square derivative. 2x. 10x derivative. 10. Okay. This is marginal revenue, sir. That is equal to 25. Now this is the equation. Bring this 25 to the left side. Minus 25 plus 10. Minus 15. X square minus 2x minus 15. Solve this equation. Take the factors. Okay. Write this minus 2 as minus 5x plus 3x. Okay. So take the common. You will be getting x equal to minus 3, x equal to plus 5. Okay. X value should be positive only as it is units. It should not be negative. That's why answer is 5, sir. Okay. See next question 199. Average cost is given. So the total cost is average cost into x. Average cost 1 by 3 x square plus x into 8 plus 8 into x. You will get total cost into x. You will get average cost into x. You will get total cost by multiplying with x. 1 by 3 x cube x into x square 8 into x 8x. Marginal cost is equal to 1 by 3 into x cube derivative 3x square 1 by 3 cancel x square x square derivative 2x, 8x derivative 8, that is equal to how much, sir? Marginal cost 23. Again write the factors. Bring this 23 to the left side, minus 55. Write the factors. You will get plus 3 minus 5. Plus 3 is the answer, sir. Coming to business forecasting. Which of the following is not a part of qualitative type of forecasting? Qualitative type of forecasting. Exponential smoothing. So survey method, barometric, Delphi method. These all are qualitative methods. Exponential smoothing is quantitative method. Okay. Smoothing coefficient alpha will be always in between 0 to 1. Both include. I value used for stable demand. Which of the following is not a casual forecasting method? Trend adjustment, exponential smoothing. Okay, so next one, 203 questions, sir. In time series forecasting model, the demands for 5 periods are given 10. So 5 periods demands 10, 13, 15, 18, 22. Okay, a linear regression linear is given where y is the forecast for the period t, the sum of the absolute deviations. Okay, with respect to their corresponding forecast t is equal to 1. Okay, so they have given trend equation, sir. In that equation we have to take t1 for first period, t2 for second period, like that we have to forecast the demand. In that y equal to 6.9 plus 2.9 into t, if you take t value 1 you will get 9.8, if you take 2, 12.7. Okay, so for the first period actual is 10, trend value is 9.8, the difference is 0.2. So second period actual is 13, expected is 12.7, difference is 0.3. Like that expected values, actual errors, write the differences, add all the differences, you will get a sum of absolute deviations. Which of the following is not a forecasting technique? Hungarian method is not a forecasting technique. In simple exponential forecasting, higher weightage will be given. So for to give higher weightage to recent information, alpha should be 1, sir. Recent information higher weightage means, okay, so we are estimating like recent demand will be continued in the future. Recent demand will also be continued in the future, like that. For that we take alpha as 1, sir. Linear trend equation, y f is equal to a plus bt, sir. For actual demand, the actual demand for the period is 100 units, but forecasted demand is 90 units. The forecast error is actual minus forecast, that is positive 10, sir. Okay, so forecast error is actual demand minus forecast. Okay, if estimate of trend component 158.2, estimate of seasonal component 94, estimate of cyclical component 105, estimate of irregular component 98, then multiplicative model will produce a forecast of see, forecast is equal to trend value, seasonal component, cyclical component and irregular component. In total, multiplication of in total we will get 153.020532. So 153, this is 153.02, sir. Here we have 15 point, so not point is not there, here we have 153.02, that's why a. Okay, which of the following is not true for forecasting? Short range forecasts are less accurate. No, short range forecasts are more accurate than long range, so this is not true. Delphi method used for judgmental forecasting, sir. Okay, so these all are some MCQs, sir. For remaining chapters like linear program planning, so transportation, assignment, simulation, theory questions only be there. Just go through those MCQs, enough, sir. Now coming to learning curve questions, here some questions are there, I have to explain those questions. I will try to explain. Then I will so learning curve 3 questions. Okay, this one 182 sir, page number 51. Bimal and Kamal are two industrial workers engaged in doing similar job. They have different learning rates. So 80%, 90% respectively. Times taken to complete their first jobs are respectively 12 and 8 hours. If both continue with the same learning rate, then after how many units Bimal will faster than Kamal? Okay, there. So see here the calculation. Okay, Bimal learning rate, Kamal learning rate. Bimal learning rate is 80%, Kamal is 90%. First unit, for the first unit they have taken 12 hours, 8 hours. Okay. So for the first unit 12, 8. Whenever the production doubles, apply the 80%, 90%. You will get 9.6, 7.2. Whenever the production doubles, apply 80%, 90%. Okay. For 2 units, 9.6, 7.2. Kamal is faster than Bimal. For 4 units, apply 80%, 7.6, 6.48. Again, Kamal is faster than Bimal. For 8 units, so 7.6 into 80%, 6.08, 6.48 into 90%, 5.38. Even Kamal is faster than Bimal here. For 16 units, apply 80%, 4.86, here 5.24. That means after 8, below 16, somewhere in between 8 and 16, Bimal will be faster than Kamal. See 11th unit, sir. How long will it take to produce 5th unit? If 80% learning rate, if 3rd unit took 13 hours. So that means here we have to take for first 3 units. 3rd unit took 13 hours, right? Now we have to assume like first 3 units average is 13, sir. Y3 is equal to A x power B. So for 85% of learning rate, B is equal to minus 0.234, sir, which will be given in the question. You don't worry. Okay. Okay. So Y3 is average time 13. So we know X3 units. Okay. So to remove the minus 1 by 3 power 0.324, calculate A value, sir. From this 3rd unit, so if 3rd unit took 13 hours, take this 13. So here we have to use y equal to ax power b, sir. Okay, y is y3. We have to calculate y3, a first unit time, x number of units, b learning index. Y3 is 13 hours, x is 3, b is minus 0.234. A we have to calculate, sir. If I know a, I can calculate 5th unit time, sir. Y5 is equal to, so this value, this exponential calculation can be calculated by using this approach, sir. Okay, take, so in simple calculator, take base plus root 14 times minus 1 into power value 0.234 plus 1 into equal to 14 times. You will get this value. Now to calculate Y5, so what is the A, sir? Calculated, so 16.81, 5 power minus 0.324, calculate this value using this approach, you will get Y5 11.5. Okay, I am telling the approach here only. When 24 hours required to produce particular kind of condenser, then time required to produce 16 unit with 85% learning curve. First unit 24, 16th unit. So apply on 24, 85%, again 85, 85, 85. So apply 85% 4 times. Then you will get first 16 units average time 12.52815. That means this would be around in between 12 to 14, sir. Here we have calculated 16 units average, not exactly 16th unit time, sir. Okay. A diesel engine manufacturing. So here, actually, to calculate exactly 16th unit, you have to calculate total time of 16 units and total time of 15 units. From total time of 16, subtract 15, then you will get actual value. But here, this method is enough as the value given roughly. A diesel engine manufacturing company has order of 4 engines. A crew of 16 members took 4,000 hours to first engine. If 18% learning curve used, then what will be the labor cost for fourth engine? First unit took 4,000 hours, sir. Whenever the production doubles, apply 80%. Okay, 80% on 4,000, 3,200. So whenever the production double, again apply 80%, 2,560. Now, so on an average, first 4 units will take 2,560, and okay, so what are they asking in the question, sir? Labor cost for fourth engine. On an average, 4 units. On an average, 4. If I produce 4 units, on an average, each unit will take 2,560 time. Into per unit per hour cost 180. Multiply 4,60,800. That would be in between 4.5 to 5 lakhs. Okay. See, an employee took 200 minutes to complete the first setup on a new machine using 90% incremental unit time. Learning model indicates the second setup on new machine will take first unit 200 hours. Whenever the production doubles, apply 90% learning curve 180. First 2 units total time. First 2 units average is 180. Total is 2 into 180, 360 minutes minus this 200. Okay, 160 is the time taken by second unit, sir. If the time taken to produce first unit of a product is 4,000 hours, what will be the total time taken to produce fifth unit to eighth unit of the product? See, first unit took how many hours, sir? 4,000 hours. Whenever the production doubles, apply 90%. We need 8 units, right? Again, whenever the production doubles, apply 90%. You get this one. So again, production doubled, apply 90%. That means when you produce total 8 units, average is 2916. When you produce first 4 units, 3240. Now calculate the totals. Total time for first 4 units, total time for 4 into 3240, total time for first 4 units, total time for first 8 units is 8 into 2916. You will get this total, sir. Okay, total time of first 8 units minus total time of first 4 units, you will get 5 to 8 units total time, sir. Okay. Okay, this calculation I will be giving in the PDF. Okay, if you want this. So here you have to calculate. Why? So average time of first 199 units, average time of first 200 units. So average time into 199 units, you will get total time for first 199 units. Here also 200 into average time, first 200 units average time, total time. Okay. So the difference between these total times, you will get 200 units time, sir. This is the calculation. Now coming to last question. So they have given December 24 attempt question, sir. Here we have to do option verification, sir. First unit took 6 hours. First 16 units total took 62.9856 hours, sir. Okay, that means on an average, first 16 units average time is 3.9366. First unit took 6 hours. First 16 units average is 3.9366. Now for this we have to do option verification, sir. So whenever the production doubles, apply 80%, 80%, 80%, 80%. On 6, apply 80% 4 times. If that is the 3.9366, option 80 is correct. Otherwise, option 80 is not correct. Okay, apply 90%. On 6, 90%, 90%, 90%, 90%. So this is option verification, sir. Apply 90% 4 times. If you get 3.9366, that is correct. So option is See, that is correct one, sir. See, here in this live session, I have explained SCM MCQs and also DM, some chapters MCQs, sir. Remaining chapters of DM, theoretical MCQs only. Okay. So now coming to okay, for MCQs, first two chapters, two MCQs. Okay, so these questions I have explained all these questions, sir. From DM, these tools for data analysis, business forecasting, maximum, minimum, network analysis, learning curve. So these chapters I have explained, sir. From these chapters, only theory questions are there. You just go through those theory questions. Okay, so you can write those MCQs. Just so in this high time, I don't want to waste your time, sir. So that's why you go through those theoretical questions. Okay, and so coming to descriptive question B, so just check whether you are able to solve over 50 questions or not. Okay, just check whether you are able to solve over 50 questions or not, sir. That's it. Okay, so if you get any doubts means, so just go through the MCQs and then super 50 questions. Okay, so also if you are attempting question number 4, also go through theoretical questions. I have given PDF also. No, that's it. If you are getting any doubts means okay, reach out me in through Telegram group. Okay, I will be available to solve your doubts. That's it, sir. Thank you all.